Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Wednesday, February 25th, otherwise known as the day that Nvidia hopefully gets to save the market. We really kind of need them to be able to help save this market. And quite frankly, we are pretty damn green on the day of Nvidia earnings. I mean, market's up. Market's up a decent chunk. You have the S&P 500 pushing 690 right here in the pre-market. Nvidia right there pushing 194. First time we've seen 194 in a very long time. SoFi's up 3.5%. Bitcoin from 62 to 66 overnight. It actually got to 66 yesterday right before the State of the Union. But it is nice to see it getting that momentum and not kind of collapsing below that $60,000 range. TSM, new all-time highs. That's up 1.4%. Tesla's up. Rocket Lab's up. Google's up. Meta's up. Nebius is up. Iren is up. Broadcom's up. AMD is up. Robinhood, which fell below 70 yesterday, that's up 3.4%. Micron, SanDisk. I mean, when you see the broader S&P and tech participate, it turns into some blistering green. And what we're seeing right now is some pretty blistering green before we have Nvidia earnings. Circle is up 20%. I didn't know if Circle had earnings today. I imagine they did. Circle, I will see if I can get their numbers real quick, but I would think that earnings is pumping that bad boy up 20%. We'll get some numbers on that in a bit. Overall, yeah, they had earnings. Wow. Revenue growth 77% year over year. EPS, they beat by 30 cents. That is why the street is probably excited about Circle. Now, Circle was a stock that hit $298 last year after IPOing at 30. So the stock definitely had a lot of momentum, fell back quite a bit, but these earnings seem to be in the right direction. It's going to be a big day. It's going to be a big day. We're going to have to see what Nvidia says. Jose will be on a little bit later today at 10:30 to give his preview of Nvidia. Obviously, he is, in my opinion, one of the smartest guys when it comes to analyzing semiconductors. He'll also talk to us about the AMD Meta deal from yesterday. AMD really getting some love from that Meta deal as well. AMD now at 215. The stock was at 195 a couple days ago. And then on top of that, at 3:30, we'll be live to see what Jensen has to say. There's a lot of big questions that need to be answered. Those questions are going to be followed through with a variety of sub-questions around CapEx, demand, robotics, inference, all of these things that Jensen really has to address. And if he can do it in an effective way and in a way that gets the market to be more excited about the trajectory of Nvidia, then I think we're going to be in a good spot. Having said that, we're going to look at some historical analysis around how Nvidia moves after earnings. And quite frankly, it's lackluster. It's like 3 or 4%, nothing too crazy. But if we can get a good quarter, maybe we get out of this February slump and we move on to the right direction. So that's what we got. Nvidia, we'll talk about the State of the Union. I was up last night as well for those that were with me. So we'll talk about what Trump said and kind of how that went through, but Nvidia is going to be the most important story of the day. Before we get started, because it's Nvidia earnings day, I wanted to do something special, and I know how much you guys love, how much you guys are absolutely, I mean, in the chat last night, you guys were so excited about instant coffee that I thought I would just make it live right here. So, you know, I'm not a barista, but you know, it's not that hard to do. So all you do, for those that don't know how to make instant coffee, you put your spoon in it, and you take a teaspoon and a half, and you just throw it into the water. That's it. You just throw it into the water. You know, we're gonna get some good energy for and then you take your spoon, and then you just mix it together. I know you guys were talking about it last night because we were up so late because Trump was talking for like 2 hours, and we all wanted some coffee. There it is. Very simple. I mean, realistically, that's all you have to do. And then look at that. Look at that. That's gorgeous. That's absolutely gorgeous. So we are going to be well energized, better than like a Red Bull in the morning. Okay. We're going to be well energized for Nvidia earnings, and cheers to everyone who's also drinking coffee. Sensational. Absolutely incredible. Phenomenal. What's a better adjective I can use? That was the best cup of joe that I've had in my entire life. Like, genuinely, I'm not even trolling. That's good, bro. That's like, I need another one. Hold on. Absolutely spectacular. All right, so State of the Union. Let's talk about what happened. Honestly, nothing crazy happened at the State of the Union. It really was one of those speeches where Trump just bragged for 2 hours and made a spectacle out of it. I mean, I thought he would go harder on the Supreme Court. It wasn't that crazy. He was mad about the tariff stuff, but he kind of moved on from it. He spent a lot of time celebrating veterans and military officials. There was a lot of clapping throughout the speeches, but I mean, there wasn't anything that was that crazy that I thought was like a standout moment that was super impressive or something that we need to talk about. He talked a little bit about data centers. I mean, there were some rumors he was going to talk a lot about data centers. He did mention that, he's going to start signing bills to have more data centers come online, but outside of that, it just wasn't that crazy. Here's a couple of clips that I want to show. He did talk about Iran and saying how much we need to make sure they don't have a nuclear weapon, which is fair because obviously that would not be the best in the world. But does that mean we're going to have military action? I don't know. But it might be part of the validation or justification that Trump uses to eventually try to get military action there. This was one of the moments I thought was relatively interesting. This is when he talks about insider trading in Congress.
As we ensure that all Americans can profit from a rising stock market, let's also ensure that members of Congress cannot corruptly profit from using insider information. They stood up for that. I can't believe it. I can't believe it. Did Nancy Pelosi stand up if she was here? Doubt it. Pass the...
I mean, that was pretty much the only moment that I thought was even kind of interesting. Everything else was just Trump making an argument around, why Republicans have done something, why the Democrats aren't standing up to clap for something. He made a big deal out of the Democrats not standing up for a lot of the things that he talked about. There was one moment where he was like, stand up if you believe we should protect American citizens over illegal aliens, and the Democrats didn't stand up. So he kind of called them out on that. Outside of that, it was a lot of political theater going back and forth, a lot of clapping. And, in terms of how the American people are going to react to that, I don't know. I think there's a much broader issue on hand in terms of affordability, and where the midterms will go will be based on that question of affordability. And I think Trump has some time to kind of change that narrative. The tariff stuff, do the American people buy that we are now being compensated correctly as a nation? Time will tell. But in terms of, was the State of the Union something super impactful? I would say for his base, yes. For people that are independent, we're going to have to see over the coming months. But there was not one of those major standout moments that I think was super, super important from State of the Union. But that's what we had. And yeah, now that is done. And I think Nvidia will have a much bigger impact on the broader equity market versus the State of the Union as we go forward from there. The IEEPA tariffs, by the way, have officially stopped being collected. So yesterday, the Commerce Department officially sent out a notice publicly. The IEEPA tariffs will stop being collected. The global 15% tariff is still getting ready to go into action. Right now, it's 10%. So that will still be collected. But if you were paying like 25% reciprocal tariffs and you're in Zimbabwe or something, that is not being collected anymore. So the Supreme Court decision is final, and that has now changed the way that Trump is going to be collecting those tariffs. All right, let's talk about some of the earnings that we had yesterday. First off, let's start off with Zeta. I think Zeta absolutely crushed it. They are now profitable on a GAAP basis, which is incredible. I actually thought they might not be profitable. They put up 23 cents of net income, and revenue growth was exceptional. 395 versus 375 million. They are now guiding for 40% revenue growth in Q1. They raised their guidance again. This is the 18th straight beat and raise quarter. And adjusted EBITDA also came in better than expected, 62 million versus 60. I mean, if they've beaten raised for 18 quarters, I don't think David Steinberg is going to want to stop that streak. And I think the next quarter, the next quarter, the next quarter, they are going to continue to beat and raise on the full year guide and the quarter over quarter guide. And I think there's a world where this company could be doing about 1.8 billion of revenue, if not more, by the end of the year. The market cap, again, just to give some context, is $4 billion. This is why I got excited about the company in the first place back in December. And honestly, the stock was at around 1830 when I initiated my coverage. Stock's at 17.29 now. So to me, the deal has only gotten better. I don't know if the stock makes a move off those earnings yesterday. I could imagine it does, but it was also up 13% during the day yesterday, which is why I think the move was relatively muted. But in terms of earnings, I thought they had an exceptional quarter. They're kind of getting the SaaS stench off of them a little bit because they're showing the growth. They're showing their moat. We'll talk more about the SaaS sell-off as well. But if they're not seen as a SaaS company put into that bucket, I think they're seen as a growth stock that's now profitable, which is really important. And profitability should bring a lot of new inflows. Workday, on the other hand, unfortunately, did not have the best earnings. Now, they had a good quarter. It's not like they completely missed on all their numbers. I think the guide was a little bit light, but they're down 10% primarily because I don't think on the call the street was that convinced that they're going to be using AI as a accelerator. They're going to be more afraid of it being replaced by AI. Having said that, the CEO kind of explicitly was like, guys, you're like losing your minds thinking that we're actually going to be replaced by AI. In particular, the Workday CEO, the exact quote that he had was that you cannot vibe code HR and ERP software away. He explicitly said you're not going to be able to do that. He also said Anthropic and OpenAI. This was the funniest part. He said the CEO said Anthropic and OpenAI are using Workday software. So he's like, the companies you think are going to kill us are using our management software to be able to run their businesses, even though you guys think they're going to take us out of business. So unfortunately, the street just has a really bad interpretation of what's happening with Workday. That stock's down 9%. GoDaddy, I don't know what the hell they said to be down 16%. This is also kind of a SaaS name as well. I guess you can qualify that as. They missed on the guide as well. Again, these are relatively small misses on guide, even after beating on EPS and revenue. But that stock was down 16%. Epsilera, that was up 9%. Transmedics, great earnings. That was up 4%. Mercado Libre, this stock was up 10% after hours, went down 5%. I think in a world in which Amazon is getting hit, Mercado Libre is going to get hit as well. So that stock fell 6%. Axon, amazing earnings. They raised guidance as well. This company was down almost 50% from the high. So anything good they could say probably was going to give it a pump. And it did get a pump, 505 in the pre-markets. That's up 14%. Axon really is a one-of-one company. There's not that many companies that compete with them in the sector of body cameras, especially for defense. So I think they've done very well. And then Kava also had a pretty good earnings. That was up 11%. First Solar, I had a feeling they were not going to do well. That's down 16%. They missed the guide as well. Solar is important. Elon keeps talking about how important it is. However, in this administration, I don't know if solar is going to necessarily catch a bid. So that stock down 15%. Enphase, although it caught a bid over the past couple of months, that actually up 3%. So Enphase going the opposite direction of solar. Enphase is down from the highs of where it was a couple of weeks ago as well. Okay, Circle, let's talk about, so those were the earnings from yesterday. Circle, let's talk about it today. That's up 20%. They beat on EPS, beat on revenue, increased their guide. 77% year-over-year growth, I think, is why the street is excited about Circle. So that is not doing too bad. I've not spent a ton of time analyzing their businesses. Obviously, it's rooted in stablecoins. They have a big partnership with Coinbase. Again, the stock was really good to a lot of people who got into the IPO last year as it went up almost 7x. But it came down about 60% since then. $74 in the pre-market. That is up 20%. Hut 8 Mining, they also had earnings today. They missed EPS and they missed revenue by 7%. That stock in the pre is up 0.73%. So that one's actually doing okay. D-Wave had earnings today as well. D-Wave is up 2%. I don't see their exact numbers, but they did have earnings today. This is another quantum stock. And that is up. That is up 2%. Celsius, I don't see their numbers either, unless Celsius takes time to report. Celsius is flat. I do think Celsius usually reports a little bit later than in the early part of the morning, or else I would see their numbers right here. So I don't see Celsius, but we should be getting their numbers soon. And we'll see what we have with Celsius. So those were the earnings from yesterday. Some of the earnings of this morning. S&P 500 right there, up 0.36%. Bitcoin getting a move, and then Nvidia up almost 1%. Celsius is tomorrow. Oh, you're right. Celsius is tomorrow. Oh, you're right. I forgot. Today's Wednesday. Today is Wednesday. My fault. That means we had Lowe's earnings today. Let me pull up Lowe's. That stock is down 3.5%. Yeah, Celsius is Thursday. Circle we had today. We just looked at that. And then TJX. TJX is down 1.5. Okay, so Lowe's and TJX. I guess the street did not like what some of the retailers had to say. Yeah, Shift4 is also tomorrow. Lowe's revenue 20.5 versus 20.34. That's a beat. Adjusted EPS 198 versus 194. That's a beat. CEO says we delivered strong results this quarter as our total home strategy is resonating with both our pro and DIY customers. I think the biggest issue with Lowe's, once again, is that the housing market is still frozen, and Lowe's obviously sells a lot of stuff for the home. So if people are not refurnishing or buying a new house, they might not need all the equipment that Lowe's sells. And that could be a natural headwind for the company right now. But that stock down 3% right here in the pre-market. Yes, CoreWeave and Redwire also are tomorrow. We have a lot of companies tomorrow. Today after the bell, we have Nvidia. Obviously, that's the big one. You also have Salesforce, which is super important for this SaaS stuff. You have Nubank. You have Trade Desk. That stock's like from 120 to 30 over the past year. You have Snowflake. You have Zoom, Synopsys. A lot of these SaaS names that are going to have to show that AI is not killing their business. And then you have the biggest AI company in the world, Nvidia. So all of those are going to be super important to see as well. Speaking of SaaS, let's get into what happened yesterday with the SaaS sell-off. IGV right there, up 0.62% in the pre-market. What happened? Well, before I do that, let me take another sip of my instant coffee. Absolutely marvelous. Okay, so the software names essentially are being treated as names that are going to get commoditized by AI. However, Anthropic had an event yesterday, and at the event, Anthropic basically said, we're going to work with these companies more than we think we're going to replace them. And then you had a bunch of these investment banks come out, like a Deutsche Bank, that says, yeah, we kind of think there's going to be a partnership, and they're going to be positioning themselves and their agents to be an orchestration layer with these software applications, not a complete disintermediation. You had Goldman that came out and said, yeah, we think the early read from the market is viewing them more as a partnership versus a displacement, which is why we're actually starting to think that some of the names like Salesforce and Adobe are going to be okay. And then you had RBC come out and say, yeah, we think Anthropic is going to highlight ways in which we can embrace the broader software and partner ecosystem working with the incumbents. So you have three major banks. A lot of other banks came out as well, but these are the three that I'm citing, RBC, Deutsche Bank, and Goldman, basically saying, yeah, we think the partnerships will become more important. We don't think they're going to be displaced. And we recommend CrowdStrike, Datadog, MongoDB, Palo Alto, Snowflake, Adobe. We think all of those are going to be okay. And to me, it's just laughable because it's like, yeah, I think most of us, especially in retail's been buying the dip heavy on IGV, has been saying these companies can't just be replaced overnight. Like, yes, there's probably going to be a growth slowdown in some respect to these companies, but the idea that Salesforce's free cash flow would just fall off a cliff feels unlikely. Maybe their top line growth is not going to be as massive, which is fair, but their overall free cash flow and the customers that they have, that's just not likely going anywhere. So IGV yesterday actually had, well, not yesterday, on February 4th, it had its largest volume in history. The next day, it had its second biggest volume in history. And then yesterday, it had the third largest volume in history. So to me, it does seem like these are clear signs of capitulation more than anything when you have that much volume coming in. Now, maybe we're all wrong. Maybe like Anthropic's going to come out with something. Wait, one of the things that Deutsche Bank has said is that we were expecting Anthropic to drop the hammer on all the software companies by coming out with another new product that would like scare the industry. And Anthropic took a different approach, maybe because they realized they don't want to like isolate all their customers. But they said, I mean, Anthropic basically came out and said, no, we want to work with these companies and we want to find a productive way for us to blend with them. Now, maybe they're lying about that, but at least in the short term, the investment banks are like, okay, so then why are we freaking out so much about the SaaS company sell-off? And so I just think it's kind of funny. I don't know if these companies are going to fundamentally re-rate, but some of them are trading at like 2-3 times price to sales. Their historical average is 15 times price to sales. And so if we get a change right there, then you could see these names getting a little bit more of momentum. Most of the SaaS names aren't priced to die. They're priced for slowing growth, not declining growth. That is fair. But when you look at Adobe, which is trading at 4 times sales, historical average is 15 times sales. I mean, that feels like it's more priced to die. More than, and some of the other ones I get you, ServiceNow, Salesforce, they're not necessarily priced to die, but there are some of these names where it's just weird. Now, CrowdStrike, no, because CrowdStrike's always had a heavy multiple. But when you look at the historical PE or price of sales that these companies have traded at and how those have been cut by more than 60% across the board, I mean, again, these are trading at the lowest level since 2014 relative to the S&P. They have definitely been re-rated to the downside. Any level of not even reversion to the mean, but just like reversion to the historical average above 10% from current levels could give you a 20 to 30% pop on these stocks without even getting to the historical mean that they've been trading at over the past 20 years. And boom, you have, I mean, if you have options on those names, those can really be exacerbating the gains. Having said that, the risk is that, you know, Anthropic actually is coming for these companies, and it's going to be a little harder to see the bright side. So I think the software name is going to be okay. I think if you wanted to nibble at IGV, it's not crazy to nibble here, but maybe a little bit more momentum from Nvidia, Jensen kind of calming down the industry around software also would not be the worst in the world. So time will tell, but right now that's what we have to see. Tanner says, imagine Instant Coffee was the first sponsor mid takes. You guys really are hating too much. In fact, I'm going to take another sip. I'm actually being forced to drink this now because usually I'm talking so much I can't even take it. Maybe now I'll just tell you guys when I'm taking a sip. So I actually finish the cup every day because usually like 80% of the cup is left because I'm just talking the whole time. And, you know, maybe that's how I actually get my coffee in every. I really think people are under. Why are you paying $7 for a cup of coffee every day? This whole thing, it definitely looks like a sponsor right now. This whole thing was $5. Paying $7 for coffee. It's ridiculous. Absolutely ridiculous. Every sip you lose aura. Imagine I'm not even drinking it. Imagine I'm just like putting it to my mouth, but I don't actually take a sip. That'd actually be even funnier. Wow, Cleo Fields, our boy, he just bought some stocks. All right, so let's transition into other headlines. That's what we had on software. Maybe software is not dead as per that Anthropic event, and then we'll talk more about Nvidia earnings. What did he buy? Again, this is the next Nancy Pelosi based on how active he is in the market. Okay, here you go. AMD, Google, Apple, Lam Research. Jose is going to like that one. Meta, and then why not Micron? Wow. These are the names that he bought, all of them in the past 3 weeks. Micron, Meta, Lam Research, AMD, and Google on February 3rd. Apple on February 12th. This is our guy right here. He is our next Pelosi. I've never even seen him talk. I need to like see some videos of what he sounds like. But there you go. All right, so he's long tech, he's long semis, and he's long memory. That's what we got for Mr. Cleo Fields. Remember, this guy bought Iren at like $10. So like he's actually had some really, really good plays. I think he's since sold Iren, but like he is active in the equity markets. And so I think it is worth keeping an eye on what he's doing. Also, the reason he's probably buying the Mag 7 names, take a look at this chart right here. The Mag 7 are trading at their lowest premium versus the S&P 493 in the last 10 years. I mean, it is just really hard when people say we are in a bubble right now and everything's going to collapse, and the Mag 7 are trading at historic lows. Once again, if you're going to say that 20% correction is happening, I don't know if it happens from here. I think we need to go up before that happens. We need to have like Meta trading at more than 18 times forward earnings for us to have some historic correction. Otherwise, it's just like, okay, so Meta's going to trade at 10 times earnings. Is that how bad of a correction we're going to have? It just doesn't feel reasonable. If Meta was trading at 35 times earnings right now, I could understand it. I'm not saying we can't have Meta collapse those levels, but you know, if we were already out and Meta was like $800, I could be like, all right, I get it. Like, it's not really cheap. But some of these names, like Amazon, I mean, you don't imagine a massive crash happening from these levels. And so it makes sense why the politicians are also buying more of the AI names. He bought Micron. So let's talk about this real quick. I thought this was important as well. This was an article from Bloomberg yesterday. Bank of Korea sees significantly higher GDP growth on chip boom. One thing to understand about the Korean stock market index is that it took, let me get the exact stat because I don't want to mess up this stat, but I heard this morning and I couldn't even believe it. This stat, if I can pull it up correctly. Yeah. Okay. So here's the stat. All right. On the Korean stock market index, which I mean, let me know in the chat if you think this screams bubble or if this is just the nature of how the stock market operates. If I could find the exact quote right here. I thought I had this one saved. Let me pull this up here. Yeah, okay, here it is. So the Korean stock market index, take a listen to this. It took 40 years to go from 1,000 to 2,000, okay, on Korean stocks. 40 years. It took a few months from November until February to move up 4,000 points. which is now equal to 100+ years of average historical return. So when you see something like this, I think you have to ask yourself, are we in the biggest super cycle in history for the Korean economy? By the way, the reason for this is memory. Once again, Samsung, SK Hynix. Or are we in not a bubble? Maybe that's too extreme to say, but are we in a bit of an elevated euphoric cycle around a commodity that at the end of the day, when supply catches up, will not be in as high of demand as it historically has been? And this is going to end up finding some momentum to the downside. This is why EWY continues to go up. It's up another 3% in the pre-markets. This is the South Korean ETF. It is now up year to date 45%. Think about that. The S&P 500 is barely up 1%. Korea is up 45%. So yeah, I mean, obviously, if you've been in the story, it's done incredibly well and, you deserve the gains. But it also makes you step back and say, okay, either the memory thesis is just going to go on and on and on, and it's like not going to be stopping, or the memory thesis is going to have a life cycle. Now, the thing about this article that I wanted to show is that the article mentions that the Bank of Korea just told Parliament that the semiconductor boom is stronger than any previous cycle and will persist through at least 2026. I thought that quote was really interesting because the Bank of Korea did not say this cycle will last through at least 2029 or at least 2028. They're saying we think it will last through at least 2026. And that to me is the scary part. Because what if by 2027, markets are always forward looking, the chip cycle or the memory cycle for the boom that we're seeing doesn't continue to last, right? So this is not me saying it. This is the Bank of Korea saying we think it will at least last through the end of this year. But that's not really that optimistic for the next couple of years, especially if markets are forward looking. Now, granted, given the level of demand in memory, you were obviously seeing a lot more momentum across the entire board, and memory demand doesn't look like it's going to be slowing down. But if for even a second it does, or maybe the demand doesn't slow down, but the supply catches up, that's where I think we're going to have a broader issue. But until then, Micron, SanDisk, those continue to be the names on playing this, or EWI. Also, SanDisk is now being shorted by Andrew Left of Citron Research. They also think that Samsung's memory supply is going to catch up pretty soon. SanDisk was down 4% yesterday. I do think it's going to be hard to keep this stock down until you have one of those major headlines. So I could imagine this recovering as well. SoFi, why SoFi pumping? For those that missed it, Jim Cramer spent almost 8 minutes yesterday on Mad Money pitching SoFi. We were doing Technical Tuesday live, and we saw SoFi moving. I checked CNBC, and yeah, he spent he spent a lot of time talking about SoFi. He dedicated a decent chunk of the episode in one of his segments on SoFi, and as he was talking about it, it started pumping up. I don't know if that's bearish or bullish, but he basically said SoFi is completely misunderstood. It doesn't deserve to be sold off here. I mean, I agree with a lot of those points. I'm sure a lot of people do. And yeah, that's why SoFi got a pump. So yeah, literally it was him pitching SoFi. And I think people just started buying it while they were watching the show. Robinhood getting a little bit of a move right here. A lot of the fintechs kind of recovering. Stripe. So PayPal might be looking to get acquired by Stripe. That was the news yesterday. PayPal up another 1% in the pre-market. Let me know in the chat if you own PayPal. It was up 6% yesterday. It was up 5% the day before that. It's kind of funny, right? Because PayPal fell to 39 and everyone was just like, all right, this company is absolutely dead. They've ruined they missed every expectation. They ruined all potential for shareholder return. And that's when the most capitulation happened, which then allowed a potential buyer, I guess, to get excited. Just like if you bought PayPal stock at 40, you've got some people in the broader fintech ecosystem, some bigger players that are thinking of buying PayPal at these levels as well. Now, here's the thing. Stripe, I'm sorry, but Stripe is overvalued. Like 159 billion is Adyen does $1.6 trillion of volume. They're worth 35 billion. Stripe does $1.9 trillion of volume. They're worth 159 billion. I'm not saying Stripe's not a better company than Adyen, more important, more global, yada, yada. But at the end of the day, they do $300 billion more of volume in payments, and they're worth 7x more. Like, I don't think in the public markets, 159 billion, especially with the fintech destruction we've seen throughout the year, would easily be accepted. So for them to buy PayPal, I actually think would be accretive to them. I do think, though, that's potentially going to trigger some questions around being a monopoly. Now, at the end of the day, someone has to put PayPal out of their misery, and Stripe would probably be the best. But the only reason they might be able to acquire PayPal is because they have this elevated valuation. And I wonder if they were to mix with PayPal, would that actually justify more of the valuation? Or would that take a deeper hit? And you know, as a result, I just think it's a acquisition that makes sense, but it also might be an acquisition that's only possible because of the tender offering that they recently did. So time will tell, but that's what we got on PayPal. I mean, for those looking to play for an arbitrage, just like you were looking to play potentially Warner Brothers for an arbitrage, you know, maybe the buyout's at 55, and if you buy it at 47, that's still a good return from here. But if the buyout doesn't happen, I think the stock falls back to 40 pretty easily because, again, there was no reason for it to pump outside of the rumors of a buyout as well. So that's what we have for PayPal. Speaking of buyouts, Netflix is in the news. And if you're a Netflix shareholder, I am very curious to see what you have to say. But I think that this is pretty good news as well. Circle, again, they beat on the top and the bottom. That's why that stock is up 20%. Is that bearish SoFi? I don't think PayPal going Stripe would be bearish SoFi. Remember, SoFi is more loans than payment transactions. So I think SoFi will be fine long term. Warner Bros. Says Paramount's $31 offer could trump Netflix's offer. Paramount has officially offered $1 more than what they did 3 weeks ago. They went from 30 to 31, which means they are paying substantially more. And not only that, they are ready to pay the entire $3 billion breakup fee that Netflix has to incur if the deal doesn't go through. So Netflix does about $9 billion of net income per year, give or take $1 billion. If the deal doesn't go through, they're doing about 30% of their net income, $2.8 billion in this termination fee, in a few months for doing literally nothing. If I'm a Netflix shareholder, I am begging them to pull out of this deal. Let Paramount deal with Harry Potter and Game of Thrones. And if I'm Ted Sarandos, I'm like, dude, we're just going to double down and really make better content. Like, at the end of the day, we got to trust that the Squid Games of the world, the Stranger Things of the world, we can invest in ourselves. We don't need to buy all these assets. We don't need to go in debt and spend $82 billion to buy all these assets that at the end of the day, in 10 years, maybe people don't care about Game of Thrones anymore. Maybe people care about Silicon Valley. And HBO Max has some great assets, but it's also like, maybe that's going to be very toxic. That's going to, I don't know how the hell Larry Ellison's going to deal with all that debt on the balance sheet when it comes to Paramount. So if I'm a Netflix shareholder, I'm like, dude, you basically are getting $3 billion for free. Paramount's going to have all the trouble with the debt. We just did 30% of our net income for doing nothing. Let's just get back to the business and get this stock higher by continuing to double down. So make better content is not that easy. I agree. Having said that, Netflix at least has a history of being able to put up bangers. They have at least one banger a year. If they can get that up to 4 or 5 bangers a year, then, and I'm being conservative when I say one. I mean, it's definitely more than one hit show per year or hit like movie per year. But I mean, take that $2.8 billion and reinvest it back into the business and just double down and make better content. Now, if they think that Harry Potter is so important and all these timeless classics are necessary for them to grow subscribers because subscriber growth has started to slow down, then I get it. But I also think maybe this is a sign that this entire situation is so toxic that walking away from it might make more sense. I mean, we've had mergers like Time Warner and AT&T that have not gone the best. We've seen when you have these multi-$100 billion mergers, it just doesn't work that often. So I don't know. If I'm Netflix, I think I would kind of watch out. CoreWeave, that's up 2.25%. We got a headline on CoreWeave. They are looking to raise $8.5 billion to finance the deal they have with Meta. It's kind of weird because, once again, last week the headline, and that's why CoreWeave fell 10%, is because $4 billion they couldn't find a buyer for in terms of debt to be able to do some different financing they had for a data center. Blue Owl was not able to find them that buyer, so I don't know where they're going to find the $8.5 billion buyer for. If I was Nvidia, to be honest, maybe just give CoreWeave the money and let them go to work, because at the end of the day, CoreWeave is once again renting out these chips from Nvidia. It creates more demand in the ecosystem, but Nvidia's already bought a ton of CoreWeave, so I think it might look a little bit too desperate. But if they can successfully raise this money, again, this is for Meta's deal in particular. They have a $14.2 billion deal with Meta, which is kind of crazy. Meta not only signed a deal with AMD, not only signed a deal with Nvidia, but they have a $14 billion deal with CoreWeave. So the fact that Meta is spending on so many different providers for compute, it means Zuck's is serious about that $135 billion that they're getting ready to spend. And a lot of the different neo clouds potentially could be benefits. Meta has a deal with Nebius as well, if I'm not wrong. So yeah, the hyperscalers are ready to spend, and they are not necessarily not necessarily slowing down. Here's a stat on Mercado Libre that I thought was interesting as well. They did $28.9 billion in revenue in 2025. They did $28.2 million in revenue in 2005. Mercado Libre's revenue over the past 20 years is up 102,000%. Just an exceptional company. Now, obviously, their margins are not the best on that revenue. They also don't have an AWS like Amazon does. They do have Mercado Pay, which is their payments platform, which has much better margins. But yeah, the company, I think it's one of those companies just buy and hold forever if you are interested in the broader sector. Bank of America says silver could rise above $100 an ounce this year. Where is silver and gold? Gold is at 51.84. Silver actually up 4%, back into the 90s. Silver and gold catching a bid today. It looks like the commodities are not necessarily slowing down as they continue to go green. Out of the 450 S&P 500 companies that have reported so far, 74% have beat forecasts, 21% have missed. So you got about a 75-25 ratio on the companies that have beat on earnings, which is good to see, very similar to the one that we had in Q4, which leads us into the biggest company in the world having earnings today, Nvidia. So take a look at this chart right here. Nvidia shares have seen a muted earnings move over the past 15 quarters. The stock has gained or fallen less than 3.5%, particularly over the last 3 reports. I mean, put in the chat what price you think Nvidia is going to be at. My gut is like pumps to 205, then goes back down to 190 over the next week. Like, I kind of think it stabilizes around 190, 195. I really don't see it going below 180. If it does, they probably messed up on some number, or the street just started getting really irrational like they did last quarter. But then again, that was before the S&P 500 5% decline, so I could understand why Nvidia took a hit during that time. I think it's either flat or it breaks 205. Now, if it does break 212, which is the historical high, 52-week high, all-time high, then that would be Nvidia really saying, hey, like, we delivered some good numbers you guys just can't deny. But even if they do that, I don't know if there's that much more incremental demand because everyone already owns this stock. I mean, they need to find a new buyer for this thing. Everyone owns it. The institutions own it. The retail owns it. Like, they're going to need to get a lot more people to enter into the name. And that just means the numbers are going to have to be really good. So I can expect it to be flat. And I think that would still be a win for the broader market. But 205 to 210 would be incredible if we can actually get a breakout, which leads to this discussion as well. Over the past 4 months, the S&P 500 has traded in less than a 7% range. This is about as tight as it has historically been in the past 75 years. So either we get a breakout to the upside or a breakout to the downside, but it looks like a breakout wants to come unless we have another freaking 7 months of just being stuck in this range. But it does feel like Nvidia might be the catalyst to officially make this happen as well. That's what we got. That's what we got for Nvidia earnings. Let me do the Nvidia pump or dump and see what people are thinking so far. Again, we'll have Jose on a little bit later in the show, and we'll see what he has to say as well. Institutions don't own it. Well, institutions are in the Morgan Stanley report said institutions are the most under-owned on Nvidia out of all the Mag 7. So that is fair. But I mean, Nvidia has like what, 84% institutional owning still? Like, it's still a decent chunk of the amount of banks that own this name. 75%. All right, 75% institutional longs, which, you know, for like Meta, it's like 82%. So that's fair. The institutions have room to buy it, but they definitely have owned it for a while. Zeta going red right here. Not sure why that's going red, but that's down 1%. It was up 13% yesterday. Nvidia still up 1%. I mean, I wonder if the pre-markets are a head fake as well. Workday, ugly chart right there, down 10.2. Warner Brothers, if you want to play the arbitrage, and that's getting bought at 31, it's at 29, so $2 a share. If that buyout does happen, Rocket Lab's up 2%. I don't know. Do we think it's a head fake? Futures were green last night. Pre-markets are green. Usually when that has happened over the past couple of weeks, we end up getting an ugly open, or even if the open is pretty for a couple minutes, then it gets ugly. And I do think it could get ugly simply because I don't think the market wants to do anything until Nvidia reports. Ironically, though, Nvidia catching a bid right here. I also like that Nvidia is pumping here because if Nvidia dumps, then it's going to dump to levels that it was at like a couple days ago versus dumping to more aggressive lows. So if we run up to like 197, 198 before earnings, and then we dump, then we go back to 190, which is not too bad. Lunar just diluted by 175 million. That stock is down 11%. Dilution usually ends up hurting some of these names. Lunar's had a good year, though. It's been strong in the broader space play. A lot of you guys are saying around 205. That's the price that I'm seeing the most out of the chat. Maybe that's what ends up happening for today. Netflix is going to take the money and just give Jake Paul 200 million. Dude, why is Floyd Mayweather fighting Manny Pacquiao at the Sphere in Las Vegas? Like, what is going on? I mean, obviously, they've got to be doing this for money. September 19th rematch. When they did this in 2015, it was like the biggest fight in the world. And I'm not even a boxing fan, and I knew that. Like, what is going on? And then he's going to fight Mike Tyson. It is just so desperately doing this for money now. I mean, these people are not in their prime. They shouldn't be fighting like this. I also wonder how much they're getting paid. I wonder how much they're getting paid for this. Like the Jake Paul, Mike Tyson thing was absolutely horrible. I mean, it was just like, it was a mess. Like there was no reason they should have done that. So how is Floyd broke? Wasn't this guy like a multi-billionaire at some point? How do people lose this much money, bro? Did he freaking invest in Microsoft at 480 or something? Goodness. That is crazy, bro. Yeah. Gemini saying he had about 1.2 billion lawsuits. I don't know. I mean, there's no reason this guy would be coming out of retirement unless he didn't need money. So I would imagine he probably does. BMNR, are we getting a move right here? BMNR, wow, 6%. Oh, that's because of ETH, right? ETH is making a move right here. He bought BMNR. 1974 on ETH. BTC, again, Circle had a great data report because Bitcoin and Ethereum were also doing great. BTC, let's see if we can get back to 70, dude. That would be a 10,000. No, it would be about an $8,500 candle if we can make that move, which would be very, very nice to see. Dude, I wish I had $1 billion. I would just literally transfer all of it on Robinhood. Oh my goodness. If I could manage $1 billion on Robinhood all day, dude, I just stare at my phone all day. It would be so much fun, dude. It would be so much freaking fun if you could just manage that much money. By the way, the Pentagon is giving Anthropic CEO 2 days to decide if he wants their software to be used inside of the military. If not, they're looking like to go with XAI. Anthropic CEO Dario responded yesterday and basically said he does not feel comfortable with the military using his AI models due to fears of mass surveillance and other concerns. So it looks like Elon might end up catching the contract for the Department of War. And if that's the case, that could be something that ends up going to XAI. Someone created a new Polymarket wallet and spent $180,000 betting the U.S. will not strike Iran by March 4th, 2026. That means you have a bunch of people betting that they will strike Iran by March 4th, 2020. Dude, these poly markets are getting kind of crazy at this point. Again, Trump in the State of the Union signaled that we cannot let Iran have a nuclear weapon. And, does that mean taking force? I don't know. But you got a bunch of people on poly market betting back and forth on when they think that could be happening. All right, we got 30 seconds until the market opens. Amazon, look at that, getting a little candle right before the bell. Put in the chat right now if you think it's fake, if you think it's not. Do you think we actually get to hold on to this green or end up seeing a little bit more pain? 76% of you say Nvidia will pump today. It's a big day for Nvidia earnings. Big day for all of us as investors in the equity markets. And we get to be alive while Nvidia gets to report. Hopefully another monster quarter. Here we go. Wednesday, February 25th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Amazon getting a nice little move, hit 211 on the open. Nvidia 194.63. Is she going to go for 195? Is she going to go for it? She is awfully close. That's up about 1%. Robinhood, wow, 5.3% move on Mr. Hoodie. SoFi, 4% move, 1940 on SoFi. Netflix, back to $80. It's been about 2 weeks. Back to $80. Street likes that. They might not have to pay $82 billion for Game of Thrones and Harry Potter. Micron, that's up 2%. CrowdStrike, that's up 1%. Adobe actually goes red. Interesting. Adobe and ServiceNow, you would think the SaaS sell-off would reverse at least a little bit after what we talked about this morning from that Anthropic conference, but nope, those are down. Lowe's is down 2%. Celsius down 1%. They have earnings tomorrow. D-Wave also has earnings tomorrow. That's down 1.7. Circle, 21% on the day. Congratulations to those that are in Circle. Massive move. That's up 20%. Enphase is up a little bit. AMD's up 1%. Blue Owl's up 1%. CoreWeave up 2.5. The S&P 691, baby. 691. Nvidia, are you going to give us 195? Literally, there you go, 195. 195 for Nvidia, baby. Robinhood, that's up 5%. Palantir's got to be 132. Palantir 131.24, very close to those levels. BMR is up 7. Bitcoin's at 66. ETH's at 1973. Coinbase, 7% move on coin. Tesla's got to be up. Tesla is indeed up. 416 for Mr. Tessie. Vertiv, is that hitting a new all-time high? I think that is hitting... That is hit a new all-time high, folks. 259.20. Vertiv, $98 billion company. They had a massive earnings last week when they jumped up about 20%. If you're in this one, congrats as well. That is moving. SanDisk actually goes red. Again, they had a high-profile short come out yesterday. I would not be surprised if that one ends up going green. Zeta goes red as well. It did move 14% yesterday. Let's see if it can get back to 17. Also, they had a great earnings. They are now profitable, which is important. Mercado Libre, I don't know why that's down 12%. There's got to be something in the earnings that I missed that's really pissing off the street. I know they missed on guidance, but 12% feels aggressive. That stock is down. Workday is down 8%. Warner Brothers is flat. Paramount Sky is flat. Rocket Lab, that's up a little bit. Meta, 644. Nebius back above 100. Iren at 47 almost. Broadcom, 334. SoFi, are we pushing 20? Not yet, but we're getting close. 1943 on SoFi. Mercado doesn't have good margins, but it's never had really good margins, right? Margins have always been kind of crappy from, I mean, maybe the street at this point is just done with declining margins and they want to see a reversal, which, by the way, thank goodness Amazon has AWS, because without it, they wouldn't have good margins either. But yeah, I guess maybe that's the story on Mercado Libre. PayPal, 47.70, holding on to about 1.5% move. Figma, that's up 6%. Sequoia, which was the seed fund for Figma back in 2010, they bought $35 million worth of shares yesterday. So you had one of their largest VCs in the public market. Sequoia has this like really cool fund where they invest in you in a private company. And when you go public, they like keep your shares in a public fund for their LPs. They bought about $40 million worth of stock yesterday on Figma. So at least their earliest investors continue to be pretty bullish about the company. Figma right there, that's up 7% on the day. Kava, they had a good earnings. I don't know if it's a 16% up move good earnings, but I guess the market is pretty excited about Mediterranean food. Look at that, 16% move. Revenue growth was about 21%. Kava did take a pretty nasty hit last year. It was at almost 150, right? It was at 170 back in November of 2024. And then in 2025, it was still at around 130. So I guess you could say this one was priced for not perfection. And if they ended up being a little bit perfect than not, then they would get a big move. Palantir right there, 131. Netflix really getting the pump. I wonder if the CEOs look at this market reaction and say, all right, the street does not want us to buy Warner Brothers. And maybe they just let Larry Ellison have access to it. Workday down 9.6%, lowest level since April 2020. Let's look at the 5-year on this. Wow. Yeah, Workday. The stock was $311 at one point. Market cap now is at $31 billion on this one. Navitas, also decent earnings. $7 million in revenue. They came in line with EPS expectations. That stock is up 11% right here. Again, they had a partnership with Nvidia last November, which got the street excited. Google, are we green on the Googs? We are red on the Googs, almost going green, 310 with Mr. Googs. AMD's getting a move to the downside. Okay, AMD just went red. What about Nvidia? Did Nvidia go red? No, but Nvidia lost 195. Let's see if these green candles in the last 5 minutes actually have some staying power. Robinhood down about $2 from the highs. Micron actually pushing the highs, 431. Adobe and Salesforce, did not expect them to go red today. Yet so many banks come out and say SaaS is going to be okay. Street doesn't care. ODD 51%. What does this company sell again? I remember this company. ODD is I completely forgot. What the hell do these guys do again? Oddity. I've heard of them. Looks like they beat on the top and the bottom. Looking at the results right now. They're like a retailer, right? They sell something. Beauty. That's what I was doing. I was going to say, yes, beauty. That's exactly what I remember them being. Makeup. Okay, so why are they down 50%? That's a bit aggressive. 50% down. Goodness gracious. We'll see if we can get some of those numbers as well. For some reason, I thought they were cybersecurity. I thought it was either between makeup or cybersecurity. Bloom Energy, 173, another 4% move. I mean, this stock has been absolutely incredible. Absolutely incredible this whole year. Energy demand continues to be strong. XLE has done well this week. It's up another 0.7% right here. Nvidia trying to get back to 195. Wow, 50% down for Oddity. I'm looking at, here's a quote from the CEO. We experienced a dislocation in our account with our largest advertising partner that we believe was driven by algorithm changes, which diverted us to lower quality auctions at abnormally high costs. This is resulting in significant increases in new user acquisition costs that are not correlated with the market or our historical experience. We believe we recently identified the root cause of the problem and have already implemented significant actions that we hope will drive meaningful progress in Q2. Okay, so their user acquisition costs went up higher than expected. These guys did $810 million in revenue. Market cap right now is at $808 million. I don't know that much about the company, but I guess that new user acquisition cost probably messed up their EBITDA margins, and that's why the stock is taking a 50% hit, although 50% feels aggressive. SanDisk just went green. That's up. Coinbase, 174 to 171, but that's green. TeraWolf also making a nice move. That's up 4%. All the AI HPC claims or plays not doing too bad. Meta again, 645. SMCI, that's a little green. TTD that has earnings today. Wow, it's at 24. Dude, again, this chart is crazy. 141 to 24 in the past year. I don't even think it's an AI thing that messed them up. It's just in general, they ended up not having the best management of the company. CoreWeave breaks 100. Look at that. Oil just flipped negative, which is really good. It maybe is signaling the market thinks we're not going to have that much of an issue with Iran anytime soon. S&P still holding 691. S&P still holding 691. Saudi Arabia is also boosting their oil output exports this morning, so that is potentially also helping oil. Amazon is launching Alexa Plus personality styles, distinct ways to customize how Alexa responds to your questions and requests. Is that why Amazon pumped? Because of Alexa? 209.70. Amazon's still green today. Nvidia losing a lot of that momentum. Very close to going red, 193.80. Tesla, though, not stopping, 418, and then Palantir just below 130. Okay, so in the first 5 minutes, you saw some really big moves, and 3 minutes later, you are starting to see, once again, the historical pattern for the past couple of weeks come back into play, which is red candles popping up, the pump being shorted, and now the market gets back into the choppiness of what it's historically been doing. Adobe down 1%, ServiceNow down 2%, Celsius down 1%, Circle still holding on to 20%, CoreWeave at least getting a move. What about financials? XLF, that's up 1%. A lot of you guys have been asking me about Wix. All I know about Wix is that when I was looking through my bank account the other day, I saw an $84 Wix charge, and I was like, I don't even have a website on Wix. I was like, I think I signed up for something like a year ago and forgot to cancel. So I'm actually kind of pissed off at Wix. It's not their fault, but yeah, I don't know why people are excited about this. I'm gonna have to go deeper into the thesis, but it's a website company, from my understanding. I don't know why it's down 7% here, but I would have to really look at the numbers here to see what people care about. $3 billion company, price of sales at 1.7 on Wix. Base 44 is the entire thesis. Base 44 is an AI company, right? To help you build websites. Okay, I would have to go through it. My gut reaction tells me there's a lot of websites that help you build websites. So if that's the thesis that there's an AI website builder, I feel like there's more competition in the space. Granted, the stock is down a lot over the past year, so maybe this is where it kind of bottoms out. Yeah, the stock was pushing 120 a while ago. Now it's at 60. Salesforce still down 0.5%. Nvidia, that is also down 1%. Is ASML making a move? ASML is making a move, 2.5% today. I think that's moving with Nvidia. That's moving with Nvidia, and that's moving with TSM, which has it hit 2 trillion. TSM has hit 2 trillion, folks. We are alive to see TSM hit $2 trillion in market cap. Claude can also build websites. Yeah, having done zero research on Wix, my gut reaction is like, can't all the other LLM companies help you build websites? Having said that, there might be something very special about Base 44. So I'll take a look because I've been getting more questions about this one. Wix right here down 7%. SMCI, that's up 3%. Coinbase up 5%. Put in the chat if you own TSM. This one again, I mean, I know a lot of people picked Nvidia and that's done well, but TSM, wow, top 6 company on the planet now. TSM is without Nvidia, or without TSM, you don't have Nvidia, right? So you have Nvidia, Apple, Google, Microsoft, Amazon, TSM. Where's Tesla? Tesla's number 10. Then you have Meta at 8, Broadcom at 9. I sold it a few weeks ago. I have 100 shares. I own it. All right, decent chunk you own this one. I mean, look, the semis have also not had a bad year when you look at SMH. Year to date, this thing's up 14%. I mean, the only thing that is underperforming outside of India and a couple other countries is the United States, is the S&P. But there are so many parts of the market. I mean, the equal weight S&P is the most important. I think Jason made a great point about this yesterday. RSP, this thing is not filled with tech. If this breaks down, we have an issue. And the reason we have an issue is because the entire broadening thesis is contingent on other parts of the market, obviously uplifting the S&P 500, which is why it's been relatively flat all year, even though tech has been taking a hit. And you can't have the equal weight start to go down. The equal weight's outperforming the S&P by a factor of 500%. If this thing starts breaking down aggressively, then that means the broadening thesis is slowing down. So if you don't have the broadening thesis and you don't have tech participating, we're going to get a correction. Like, it's inevitable. So it's very important to keep RSP on the watch list and just make sure that one is like holding stable, because the S&P, it'll be affected by tech every day. SoFi losing 19, 18.99. Robinhood losing all of its momentum as well. Once again, every day, it's the same story. You get a bit of a pump and then it gets out of you. Even Bloom losing a lot of its energy. Nvidia holding on to some of it. If it can break 195 again, that would be the second test of the day. AMD going red. Google going green, which is nice to see. Ford is green. IONQ is green. DoorDash, by the way, is leaving a bunch of countries today. They're leaving Saudi Arabia and a few other countries because they basically said we don't see a lot of growth opportunity. They're leaving Qatar, Singapore, Japan, and Uzbekistan. And they're winding down Deliveroo and Wolt operations after a multi-month review. They said it won't affect their guidance, but they're leaving. So for the Citrini guy who said people are just going to vibe code their own DoorDash, I mean, it's not that easy, even if you're DoorDash, to survive in some of these countries. So they are leaving that. ASTS, that's flat. UNH, that's up 2.3. Zeta is down 2.7. All right. Zeta, again, I thought the quarter was exceptional. They are now profitable, which is the most important thing. You have a lot of funds that can get into the name. And they're growing 40%. I mean, they traded 3 times sales. They're profitable. They're growing 40%. I'm not sure what more the street wants, but if it's going to get caught up in the SaaS sell-off, I really do think this is one of the better SaaS names that's out there. And by the way, I mean, they keep touting. Literally, the text of the press release was Zeta delivers 18th straight quarter of beat and raises. I don't think they're going to try to not have 19th straight quarter, 20th straight quarter. I mean, they're going to want to keep this streak going for as long as possible, because it's just a hell of a thing to beat and raise every single quarter for multiple years in a row. And so I think they're very proud of that, and that means you can keep expecting further beat and raises. Netflix right there, almost 81. Haven't seen Netflix get this move in a while. Nate says they're sandbagging heavy too. Yeah. I mean, you could tell looking at the numbers versus the historical numbers from last year that they're probably going to beat those numbers as well. Is Zeta a good stock to sell puts on? So in general, my philosophy on selling puts is twofold. It's a very simple philosophy. Number one, do you want to own the stock for a long time? Or at least like a year? Do you have like a year-long trajectory on owning the stock? Which means, do you think it's at a level, or do you personally just have an affinity for wanting to hold the stock at least a year's time frame? Number two, is the stock beaten up enough where if you got assigned the shares, you'd be happy to own it? So like, I don't think I would want to sell puts on Google because, I mean, it's taken a beating this year, but it's not really taken a big beating, you know? So if I sold puts at 300 and it goes to 295, I'd probably be upset. Microsoft, I wouldn't mind, which is up 1% today, owning it at 390. If it goes to 385, it's like, all right, whatever, because it's down from 480. Like I'll bag hold those shares. But it needs to already be taking a beating. And the stocks that have taken a beating also tend to give better premium. So yes, in my opinion, Zeta, because it's down from 24. So selling puts at like 14, 15 bucks to me is not crazy, but you would also want to have to own it. If you really don't want to own it, then you shouldn't sell puts, because then when you get assigned, you know, you're going to be annoyed that you own the stock. AppLovin, that's making a move above 400. 407 right there at 3.5%. That's making a move. You guys saying TradingView is not working today? Okay, they might have some bugs. Grab is up 5%. Someone says, I read an article where they stated several institutional investors have reason to consider having a position on Grab. I think also Grab got a reiteration by one of the big banks this morning with their price target remaining at $7, if I'm not wrong. That's probably also helping. Yeah, Morgan Stanley, they reiterated their price target today. That's probably giving it a little bit of a move. Yeah, a lot of you guys saying TradingView is not working. Weird. I guess that's going to create some issues. Amazon at 210, SMCI at 32. Axon again, massive quarter. I don't know if I would buy Axon here. Again, they have always been an expensive name. The time to buy it was yesterday, quite frankly. I don't know if you buy into the strength, but it was a good quarter. I just, again, in this market, I don't know if gains are going to last as easily. But it was a hell of a quarter. E-Trade app is not working either. Wow, are we having bugs? E-Trade has been bad for the past 2 days. Okay, maybe it's brokerages. I mean, let me know if anyone's seeing issues on Robinhood or Schwab. I'll open it up for the first time today. Seems fine. Not really bugging out too much. SoFi back at 19. Nvidia trying to get 195. What else do we see? Bitcoin getting a bit of a move. It's probably AWS again. Dude, if AWS is another crash out and it tanks, we got to buy it again. I mean, it's just too important. It's too freaking important. Got a headline from CoinDesk. They say Bitcoin miner capitulation nearing the end after 3 months. This was the same signal that preceded the November 2022 bottom when Bitcoin was at 15.5 thousand. Now, maybe that headline is a bit of cope, or maybe there's some actual analysis around miner capitulation. But if that's true, maybe we're going higher. Maybe we are going a little higher. BM&R, 8%. 8%. Kava still moving as well. That's up 20% now. Microsoft, maybe that gets back to 400. Where's Shopify? Shop is, wow, weird. Shop's up 5%. Adobe's down. That seems to be diverging, not just in the SaaS sector, but in the growth stock sector. Growth stocks are having a relatively okay day. SaaS names that don't have a lot of growth are not. ServiceNow is down 0.5% as well. Amazon didn't crash when AWS went down. No, it did. It took a hit, right? It went to like 212 from 220. I mean, it wasn't a massive crash. I remember there was a dip that day. Maybe I'm wrong, which is kind of crazy because Amazon is now even lower. My lowest buy was 212 back in September. It's at 210. I mean, this stock just has not been able to catch that bid. DoorDash still up 3%. MicroStrategy up 6%. It famously didn't dip. All right, so then I guess Amazon was flat during that time. But then we rallied to 260 from 212, which felt like buying the AWS crash was worth it. It's just then it went the opposite direction. Do you own Bitfarms? I do not. I owned it very briefly back in 2024, like early 2024. They kind of transitioned to like an AI HPC play. The only AI HPC play that I think is actually, really legit is Nebius, and then Iran is probably second. I understand Cypher and Wolf are good, but like I would just never be a buyer of those stocks. Like I need a real diversified full story, and that's what I think you get from Nebius. But like the Clean Sparks and all these companies, I don't know, dude. I think a lot of them were really desperate and they turned into AI plays to try to get some momentum in their stock. I mean, the Bitcoin miners have been the worst trade of the past 4 years. Like literally in the bull market that we've had, the Bitcoin miners did nothing when Bitcoin went to 130,000. Like absolutely garbage thesis on those names. And I was in them for a bit. I got it at Clean Spark at 18. I made like $1,000, nothing crazy. And then I just put all of it into Hood at 14. And I felt Hood was going to be the better play. Palantir 132. Okay, you're seeing a little bit of a move right there. Nvidia, are we testing 195 again? Wow, breaking 195. Let's see if 196 resistance is potentially easy to get through. 196, folks, has 201,000 shares. HIMS is also moving today. The Qs are moving. Coin is moving. All right, 20 minutes in, we're starting to get those green candles coming back, and they're putting in some new highs on a lot. Even Zeta moving. Microsoft trying to get back to 400. AppLovin, big move, 5%. Axon, 20%. Again, I'll be live with Tanner, Jose, and Neil at 3:30. And we will be covering Nvidia. Is Reddit getting a move? Reddit is getting a move, 4%. By the way, you guys are right. I'm looking at Down Detector. E-Trade has had massive user reports submitted, and so did TradingView. So both of those still pretty ugly. Okay, Nvidia right here. If we can break through, it would be nice. 195.36 at the moment. Do we have macro data today? Let's see. Mortgage rates are at 6.09, lowest in 4 years. I think we talked about that yesterday as well. At 10 a.m., do we get anything? We don't get anything today. All right, so no crazy macro data. Nothing that could necessarily make the market too upset. TMDX is getting faded. Yeah, TMDX right here. They beat EPS by 600%, dude. Stock ended up going red. It was at 150 for a little bit yesterday. Again, this is also small cap. It's not really in any major thematic. They do organ transplants, So they're just going to have to get the market to be on board with their numbers. Nvidia, 20 cents away from 196. It looks like it's getting a pre-earnings pump here, which, tends to not necessarily always stick, but I don't hate it at these levels going into earnings, just because if it dumps, it'll dump back to 190. It's like, all right, I'd still be pretty happy with that. What if Nvidia just blows everyone away and it's like 220? Like, what if it's like, I'm being too optimistic here, but what if it's just like completely annihilates every expectation and the entire market's like, oh yeah, this is real. Like, this is really real. I feel like everything pumps. I feel like the next morning, the market maybe gets out of this funk it's been, and maybe tech starts to cooperate. S&P probably breaks 7,000. And it just ends up being Nvidia saved the market again. Then that would be the top. Maybe, dude. Maybe. I was looking at some CapEx projections this morning as well. I mean, Citibank is expecting CapEx to go 20% up year over year, which means the hyperscalers would be spending about $792 billion next year, which I don't think the street would be upset at that. Like, they're spending about $667 this year, which is up 62% year over year. the growth rate on the level of CapEx would slow down to 19%. But if they're still spending $792 billion in 2027 and then maybe $810 billion in 2028, the majority of that still goes to Nvidia, Broadcom, AMD. Like, they still have massive levels coming in. And if then Nvidia can say, outside of the hyperscalers, here's the other people I can find to pay me, whether it's sovereigns, whether it's robotics companies, etc., then Nvidia's growth doesn't have to slow down that dramatically either. But I guess that's going to be the biggest question for them. S&P 691. 691. We already know how much CapEx is coming to Nvidia, so what else would pump from great earnings? That's a fair point. I guess it's then the magnitude of the beat that Jensen gives. Like, the reason we pumped to 220 in October, 212, is because Colette, the CFO, said we're going to do $500 billion in 5 quarters. Like, no one expected that. I think the street was expecting 370 over the next 5 quarters. They said, which is basically a year and a half, they said 500 billion. In January, she said we're going to do more than 500 billion. So, and she said materially more. So maybe if they throw out like a 580 billion in 5 quarters type of number, that could get the street excited. But it would have to be one of those things where the street's like, man, this is a big deal. Apple right there, 273, as that goes green as well. Foreign investors bought a record $1.5 trillion of U.S. financial assets in 2025. That's up 31% year over year, led by Europe, while China was a net seller. Okay, so foreign assets continue to, or foreign countries continue to buy up the United States. Coherent is up 7% on the day. They had earnings a couple of days ago, I think. Maybe it was last week. That one did relatively well. Amazon 210, ServiceNow just flipped green. Adobe very close to flipping green. PayPal 48. Wow, PayPal marching along back to freaking 50. That would be quite incredible to see if we get it. If PayPal actually makes that type of a move. Klarna has hit 55 million monthly active users. That stock still got hit 30% the other day. Oh, wow. Klarna's up 10%. Is it just on that headline? Klarna hit 55 million MAUs. Wow. Not expect to see that. Fintechs are all coming back into action, at least to an extent. Klarna right there up 11% on the day. By the way, Uber and Joby launched Uber Air in Dubai today. I think Joby should be up on that. Joby is up about 4%. This will let riders book Joby's all-electric air taxi rides directly in the Uber app. So Uber and Joby in Dubai. Palantir catching a bid, 133. Again, all the SaaS names recovered yesterday except Palantir, so it makes sense that Palantir is getting a little bit of a move higher. Again, they got that $1 billion DHS contract last week. Stock right now at 132.98. Why is A-Lab down? I'm not sure. This one got hit last week as well. Arista also got hit based on that Meta Nvidia deal and potential demand for networking from some of these companies going to the downside. Oh, yes, the Uber CFO did buy shares. He bought about 2 million worth of shares yesterday. That's a good point. First insider buy in a while from the Uber executives. Maybe on March 1st, we're going to see Anthony Noto buy some SoFi. He did hint that he would want to buy SoFi stock at these levels. So maybe we would see that as well. Do we know if NVIDIA has any China revenue? There was a headline yesterday saying that China told the Commerce Department they have not received any NVIDIA H100s. So I don't think we're going to get China revenue this quarter. I think the guide will probably include China revenue. Then again, Jensen might not want to just because he still would want to be conservative. Bitcoin back above 67. It's a $5,000 candle from yesterday. But it does feel like China revenue is going to come eventually, even if it's a few quarters from now, which should still be bullish for NVIDIA. Broadcom, that's green. Accelera is flat. I didn't look into the earnings too much, but gave up most of that pump. Are you buying any of the SaaS names? The only one I've been buying is Zeta, but put in the chat. I mean, is anyone like really doubling down and calling the bottom on one of these SaaS names or IGV. I mean, I bought a little bit of Microsoft a couple weeks ago, but I wouldn't say it's like a real position, or I wouldn't say it's like a doubling down on the SaaS thesis. I don't know. I feel like I'll see Adobe's up there. That one's cheap. ServiceNow, I think, is stupid, below 100. Salesforce, I'd rather see what Benioff says today. Salesforce getting a move to up 2%. I would really like to see how Benioff thinks about all this before getting excited about it. Matthias says I bought a real position in CRM at 176. ServiceNow is what I like. Focused on ServiceNow. I'm thinking of ServiceNow. See a lot of Adobe's here. You know, I actually don't hate Figma. I just think they're still a relatively new company for the public markets. And so I feel like giving them a couple quarters to get accustomed to it would be important. But that stock up a nice 9% right here. AppLovin is a name I feel like is so obvious, but the whipsaws of it going up and down, I don't know if they can be easily handled, particularly because of not only the short reports, but also just because the stock still does have a healthy sales multiple, even if it doesn't have a super large earnings multiple. Like, the only stock that really seems absolutely depressed on every level in software feels like Adobe. Like, Salesforce is there, ServiceNow is there, Intuit a little bit, CrowdStrike no. Adobe's the one that's like completely hit on a lot of levels, which means that one reverting should not be crazy. Wow, Nvidia 196. I don't even see that. We broke through. Was that just now? Yep. Okay. Have we seen 196 all year? We have not seen 196 all year, folks. This is officially the highest level for 2026 for Nvidia. 197 resistance is 114,000 shares. 114 grand. I can't drink my instant coffee anymore. It's too cold. But I drank a lot more of it today. So I hope you guys enjoyed while I was taking sips of it. But now it's too cold. 196.25. 196.25. Netflix still making that move. I mean, if you bottom tick this at around 72, you got to be pretty happy. Just reheat it in the microwave. I need a microwave in my office so I could just like lean over. That would be a good idea. Honestly, that would be smart. Palantir 132.80. Where can we find the resistance share? It depends on your broker, but on Robinhood, if you just click the yellow candle near a stock price, then if you have access, if you pay for gold and you have level 2 data, then it shows you the order book. You can do it on Webull, though. You can do it on a bunch of different platforms, so you might even have to pay for it. But with gold, it's easier to see. Look at Coin, 173. That's up 7. I don't know why Oddity is down 50%. I mean, well, we found out why. I don't know if it justifies 50%, but their user acquisition costs apparently spiked due to a quote-unquote algorithm change. Kind of sounds like a glitch, to be honest. 50% feels a bit ugly, but yeah, that's why that one's getting hit. Salesforce getting a nice pump here, now up 3%. Meta, can we pass 655? Meta, 650, still up 2%. It was at 660 last Thursday. You are literal feet away from the kitchen. Okay, but I can't leave and go heat it up. That's the issue. That is the issue. That's why I think I've trained myself on how to not use the bathroom in the morning from 8:45 to 11:30. Because as you guys can tell, I never leave. So this is why my dad gets so mad at me. He's like, why don't you eat breakfast in the morning? I'm like, Dad, I talk for 3 hours. I can't eat breakfast. Like, it's not going to work. He gets so mad. Like, Indian parents, if you don't eat, they think you're like committing a sin. They're like, they literally like, they think you're like the worst person if you don't eat. He's had to get used to the fact that I just don't eat in the morning. But that's also why I'm able to stay. Coinbase, that's up 6.5. Amit uses diapers. Oh my gosh. Shopify's up 5. Look at Shop, 123. I mean, we are seeing some really heavy green candles. Grabs up 5. Microsoft's almost 400. IGV making a nice move. Are we back, guys? Are we actually back? Or is this fake? Let's do a poll in the chat. Is this just pre-Nvidia hype? The market's giving us a little taste, but in reality, they're going to take away our gains pretty soon. Are we back? Not going to lie, it feels fake. It absolutely feels so fake. But if Nvidia crushes, like some of this stuff is just like, why was Palantir at 125 yesterday? Now it's at 133. Like nothing changed in the past couple of days. It's just the market decides they want to take it up today, so it goes up. Nvidia, though, she is gunning for 197 here. She's actually gunning. If we get there, that would be nice. That would be nice. SoFi still 1920. And Nvidia is still making the move. AMD is actually red, though, on this. I don't think Nvidia crushing would change the narrative in any meaningful way. Yeah, I mean, well, what's the bear narrative right now? That's a good question. What is the bear narrative that we're dealing with right now? If I had to make a bear narrative, I mean, there's a lot of things you could point to, but like a reasonable bear narrative, I guess, is labor market weakness leads to earnings growth decline, leads to multiple compression. Having said that, labor markets are not abysmal yet. Earnings growth has been fantastic. Whether it's K-shaped economy or not, that's supporting it. I'm looking at the numbers. The numbers say earnings are really good. And then CapEx growth is leading to GDP growth, which should ultimately help not only with the labor market, but also with earnings growth. So, I mean, what exactly is like the massive contrarian bear? Because I think a lot of the bears also, you know, Joseph Carlson also had a great tweet yesterday. I didn't even notice this, but if you look at the top 3 sellers on Substack in finance, it's Citrini, who just put out the biggest bear article on the planet, Michael Burry, and then this guy named Doomberg, who's not necessarily super bearish, but you know, a bit more concerned about the broader macro. These are your 3 best sellers. And that what that told me is like fear is selling, especially in finance right now. Fear is selling. But if fear is selling, again, let's just think about it logically. If everyone is buying these Substack subscriptions to people who are selling fear, how is that a top? That's everyone being afraid. The top is when people are buying Substack subscriptions to someone telling you that everything's going to go to the moon and everything's great and it's awesome and it's amazing. And like, we are not euphoric by any sense of the imagination. Even the high beta names that ran up in January have corrected meaningfully. Like, I wouldn't say that quantum is as euphoric or space is as euphoric as it was back in January. So, you know, if everyone's prepared for some correction, I don't think that's the easiest way to make a bear case. Hims getting another move right here, 1628. That's up 5%. This is definitely not the top. We are range bound. Yeah, it definitely feels more range bound than not, than it being the absolute top. I think if we break out to like 73, 74, 100, that's when people can have a better argument for saying, all right, this might be a little toppy. But collapsing from 60, what is it, 6,900 that we've been at for the past 6 months at this point feels a bit weird. Is the 10-year up today as well? The 10-year is up a little bit, 4.052. JK, thanks for the super chat. Don't kill me, but it feels bull trappy. Exit liquidity off event. I mean, maybe the market makers are trying to pump up everything before Nvidia earnings to get people to feel good, and then regardless of the numbers, they'll dump Nvidia. So, I mean, yeah, it's a fair perspective, and we've seen it happen the past few quarters as well. Rick, thanks for the super chat. Being a parent, I hate seeing kids not eating breakfast. I'm sure the audience doesn't mind you taking a break during the stream. I generally don't like eating in the morning. Even since I was in college, like I don't know. Some people love it. I just never been a fan of waking up and having a big breakfast. But it also helps because I feel like if you eat too much, talking for the next few hours gets a little bit more difficult. But I love my instant coffee. And I'm so happy I got to share. Should we do that every morning? Should we make the instant coffee every morning? I thought it was a good bonding experience for all of us. For those that missed it, if you go to the first 2 minutes of the stream, I made my instant coffee instantly. Get it? With everybody. It took literally 5 seconds. And we got to enjoy it together. Google 312. 312. Dude, it really does feel like I'm sponsored by instant coffee, but I'm not. I'm really like, I just like instant coffee. I think it works. It's so instant. Shopify 4%. What else? Robinhood 74.97. This one's been range bound as well. You're drinking bear market coffee. It is absolutely bear market coffee right now. 100% you're full on bear market coffee vibes. You know, the reason I bought it as well, because my Keurig stopped working. It was like a really old Keurig, but it like stopped working one day. And I was like, screw it. I'm getting annoyed at this. And I got a different one. All right, let's see some of the news headlines. What do we got going on? And then we'll keep going from there. Oh, do we have more Supreme Court opinions today? Oh, yeah, on Lisa Cook. We're getting that today as well, I think.
But guys, I have some good news. It's a little pushback to the narrative lately and the fears lately about AI coming for all of our jobs, coming for white collar jobs, coming for the economy, coming for consumer stocks, basically coming for everything. Remember, this Citrini note created a lot of fears and a lot of disruption and a lot of sell-off on Wall Street. Well, guess what? Citadel has a very interesting note out today from Frank Flight, who's a sort of macro strategist over there, with some pushback. And the thrust of it is that just because AI is accelerating very quickly in terms of its technology and what it's able to do does not mean that the economy, enterprises, and consumers will be that fast when it comes to adopting it. And just a few charts that he highlights here that I thought were worth sharing with everybody. Number one, rest assured, software engineer job postings are way up. In fact, they're much higher than overall job postings. Remember, this kind of goes against the narrative that all the software engineers are going to be extinct because Claude Code is just going to do everything, right? That we're not going to need as many software engineers. Right now, there's still a ton of demand for it, which I think speaks to a little bit of the slower adoption. And then the other chart that I just wanted to show was the overall enterprise adoption. And this comes from the Citadel report, but he takes it from a St. Louis Fed survey about whether businesses and working age adults are using AI. And what you can see here is that there's a lot of different lines, but basically it just shows that the share is rising slowly. It's not rising quickly. It's not a linear move. And I think that's the bottom line. They say for AI to produce a negative demand shock, the economy must see a material acceleration and adoption.
I mean, look, these reports by the analysts are not necessarily incorrect. We read through a bunch of them this morning by Deutsche Bank and Goldman as well. It's funny because now, the banks are trying to use whatever data they can find to help the narrative make sense for them. Whereas for the past 2 weeks, all these banks were saying, hey, software might be in trouble because, so it's like, it's very wishy-washy. I don't think any of them really know exactly what's going to be happening to the software sector, but they're trying to make the best guess, just like all of us. And I think the best, most reasonable guess is that there will be some disruption to what the foundation model companies are trying to do in the enterprise, but there will not be absolute destruction. And if you think these stocks are priced for absolute destruction, then that's obviously where the alpha and the opportunity must be as well. Hey, let's get an update on Workday earnings, given that was the biggest one from yesterday in the software space.
Its earnings, Seema.
The company did, and Workday founder and CEO Anil Bousri, David, said point blank he doesn't see AI replacing or relegating the company's business, adding that application domains are hard to build and that no amount of vibe coding is going to produce an entire business. He ultimately sees Workday and the large language models as partners where to create a systems of record, Workday will be using the reasoning capabilities of OpenAI and Anthropic. But those comments seem to be not resonating at this point. It's light guide for 2027, raising some new questions around competition. Mizuho analysts calling its outlook, quote, disappointing, though they do view Bousri's return as CEO as a net positive.
That's not me, by the way, on the audio. That's CNBC.
RBC Capital analyst Rishi Jaluria sticking by his outperform rating, referencing early signs of AI traction. The company did reveal new customer additions and ways both its recently acquired companies, Sana and Paradox, are being integrated into the company's toolkit, while also working to automate key processes across human resource management, and that does include payroll. But M&A, guys, that's going to be key. Even when we hear from Salesforce and Snowflake reporting tonight, how much do these giants lean on inorganic opportunities to boost their AI capabilities, especially given the big discount so many public and privately listed software names are trading at right now? Sarah.
And, Seema, I'll come back to you. I mean, interesting looking through the call, Bousri. I mean, you're going to hear this from a lot of these companies that do important things for other companies. When he was talking about payroll, he's like, you can't be probabilistic. It needs to be 100% accurate and completed 100% of the time. And you're going to hear that a lot. Probability versus, probabilistic versus deterministic enterprise apps, I think, is another thing that they're going to lean on to say why we're so important and we're not getting kicked out of the enterprise anytime soon.
Sure. And then I would also reference some of the comments by Workday founder and CEO Anil Bousri, who talked about this disconnect of, well, okay, we're working on agentic capabilities to automate more of the workflow, but then why is the guidance so conservative? That was a big question on the analyst call. And he said, listen, I just joined, I'm back in the CEO seat just as of a few weeks ago. I'm an optimist, and I see that some of the agentic things they're working on will come to realization towards the back half of this year, David. So maybe we're still in the early innings as these companies sort of catch up to this realization of how fast Anthropic and OpenAI are able to come up with enterprise offerings.
Yeah, how much market patience too?
Yes.
It's 56% off the 52-week highs.
I mean, again, if Salesforce can come in and give us some really good numbers, Workday had decent numbers, but they weren't like, oh yeah, software is not dead numbers. And quite frankly, I'm not that confident that Salesforce can put up those types of numbers. But if Benioff can give us something, maybe that also is what aids to the sentiment change around software. Adobe would be the interesting one, because Adobe, I feel like, is already, I mean, they've just been beaten up so much that literally any good news should be enough to get this thing hopefully back to like 275. But their earnings are in a couple weeks as well. Take a look at this chart right here. I thought this was interesting as we get ready for Nvidia earnings. Jose, again, will be on in about 10 minutes and we'll get his thoughts. Here is how much Nvidia is held by the top 5 largest ETFs. VOO has 118 billion, IVV 59 billion, SPY 255 billion, VTI 139 billion, and the Qs 36 billion. So that means a bit over 10%, about 12% of Nvidia's market cap is held by the top 5 largest ETFs. And, they're all going to be waiting to see what these numbers look like, to see if these things can continue to go higher or not. What is Derek thinking right now about the software sector? So I was actually talking to Derek over the weekend. So again, he's, head down building a startup, and he's been making some good progress over the past couple months. But the one thing he has told me in building his startup, it's like B2B, SaaS, commerce. Kind of think of it like Shopify for business. I'm really simplifying it, but that's kind of what he's building from an agentic perspective. And he's worked in commerce his whole life. He's built companies before that sell things online. So that's kind of why it's a sort of natural transition for him to be working on something like this in the SaaS sector. His argument is that things are moving too fast. And him and his team will come up with an idea, and literally a week later, that idea will not be useful anymore because of AI. And so they are building with AI first, but as from someone's perspective who's trying to build $1 billion software company, I mean, one of the biggest challenges that he's told me is that AI is so quick that if you do not adapt and start using these tools, especially those agents, in a meaningful way, whatever idea you have is going to be commoditized very quickly. And that's pretty much what we've been seeing from a lot of these anecdotal startups anecdotal arguments from these startups that have felt their content becomes commoditized or their ideas become commoditized by something from Anthropic. Having said that, speaking of startups, I don't know if people saw the news yesterday, but this was kind of crazy. And this once again reinforces the bull case, not just on Nvidia, but also the broader AI ecosystem. So this guy named Reiner Pope just raised $500 million to build a new chip company. Okay, the chip company is called MatX Computing, high throughput chips for LLMs. Now, before we even talk about what the company is or why it's important, the fact that there is an ability for a company to raise $500 million in a seed round to say, we're going to compete with Nvidia, which is what they're explicitly trying to do, compete with Nvidia, to me just goes to show people are saying, oh, like, chip demand is topped and there's no more CapEx and, the demand is not as high as it is. And it's like, dude, there's literally companies that are out there that are raising fresh capital because they want to compete with Nvidia and they think there's an opportunity to compete. Here's what the CEO had to say yesterday on why he thinks Nvidia's CUDA moat actually is the opportunity for them to build a new chip company.
Yeah, I think it's really interesting. Like, CUDA is for NVIDIA simultaneously the biggest strategic advantage and also a constraint, because their promise that they make you is that you can take a CUDA program written 10 years ago and it will run on the next generation NVIDIA GPU. Jensen goes on stage and promises this. It is so valuable for them. And yet at the same time, it means the next generation GPU has to look just like the GPU from 10 years ago. So it means things like the numerics can't change, the way the cores in the chip are connected to each other can't change. The actual memory architecture can't substantially change. All of these things are kind of locked in by the programming model that they designed more than a decade ago for general purpose parallelism. And so this is where we've seen the biggest differentiation. If they wanted to say, well, we're going to completely give up our CUDA approach and start a new generation of chips, maybe they could do that. They would lose all of this lock-in that they have, but then at least they would be on a level playing field with us. But that's not what we see. Really, we see them being committed to their trajectory. The CUDA lock-in is very valuable for sort of the mid and tail of the market where people are so sensitive to the software cost. But really at the head of the market in the frontier labs, the software is not the main cost, the hardware is the main cost. And so if you're willing to rewrite your software, maybe you can actually switch to a more efficient hardware.
Now, I don't know if he's going to be right about his thesis. Okay. Maybe there is a reasonable argument that the CUDA lock-in effect is so intense for NVIDIA's clientele that they can't make a chip with a different level of architecture that would potentially ruin the CUDA programming that's embedded within those chips. Maybe that's a reasonable argument. Maybe that's BS. Having said that, the fact that that's his argument and he was able to convince people to give him $500 million to compete with NVIDIA, and we're talking about, AI demand is peaking. I mean, the amount of money that's out there that wants to continue putting investments into chip architecture and the ability for us to continue going. And, if this guy ends up being super successful and he comes up with a new throughput chip that is even more custom for companies like OpenAI and they end up buying his stuff over NVIDIA, again, I think it's unlikely, but time will tell. That means there's just more money coming into the ecosystem. Having said that, by the time they actually get a chip out into production with all their supply chains, I mean, NVIDIA might be generations ahead and have solved the problems that he's concerned about. But I just thought it was fascinating that there was money out there. Jane Street invested, a bunch of VCs. I mean, you got some pretty heavy hitters put $500 million together to give to this company to compete with NVIDIA. So once again, it is just quite incredible. And I think that is another indicator for why Jensen's going to show that demand is pretty strong. Amcor is at 50, 4.3%. That's up. That fell to 48 from 55 over the past couple of days. That one is back. So Netflix going back to 120. Who's in Netflix? Who's heavy in this? I mean, today's your day, 72 to 81. Now, here's the thing. Do this Netflix management seriously try to make an even higher bid? I mean, this stock goes down if Ted Sarandos comes out and says, yeah, we're willing to offer $95 billion instead of $82 billion or something crazy. I mean, I think Netflix shareholders would be pissed off. But if he says, you know what, you can have it, yeah, maybe this thing just pumps right back up into at least the 90s, if not the 100 range, and goes from there. Do you like Tempest AI? They had incredible growth yesterday. I don't know why the stock's down 4%. They're growing EPS at 78%. They're growing revenue at 84%. So the stock has made a substantial move from a couple of years ago. It was at $25 back then. Zeta up 2.83% of the day, but never really dug deep into Tempest's moat, but the growth is incredible. I think guidance maybe is why they took a hit, but usually when these companies get hit on the guide, a lot of times they're sandbagging on the guide too. So it's one of those things where if you believe in the fundamental thesis, they end up being buy the dips. AMD right there, trying to go green at 214 as well. Do you think a $500 million startup could actually take share away from Nvidia? No, but the fact that they're raising, well, the startup's actually worth a couple billion. They're raising 500. The fact that they were able to raise 500 million to me was the part that I was just like, wow. Like, there's actually investors out there that would rather, instead of buying Nvidia, invest in a company to compete with Nvidia. I just thought that was fascinating. And I think that means that in the broader investing ecosystem, there's a lot of money willing to be allocated. Because the takeaway is they don't see the cycle ending anytime soon, which is why they're willing to fund new companies. And that to me is actually super bullish for AI and Nvidia. Let's hear from the Carlson brothers. They just raised that 159 billion. Here's what the Stripe CEOs had to say about where they think agents are going with commerce.
Are you seeing overlap between stablecoin activity and AI activity? There's been sort of a new narrative around agents will use stablecoins, but I feel like agents can use legacy payment rails just fine. And then also you can do really cool things with stablecoins that are not really AI native necessarily. And so I'm wondering how much overlap there is there.
I would distinguish between how things work today and how things will work in the future. In terms of how things work today, agents absolutely can. A lot of people build with Stripe. You can have a one-time use credit card that your agent can go out and spend. But if you look at what's happening, there's lots of, agents having to solve CAPTCHAs to, be able to kind of do stuff on the wider web. Clearly, the web is not built for agents. And as a result, they have to get creative to actually do any real-world tasks. And that's true in kind of economic activity as well. Where we think things will go is just there will be a huge amount of agentic commerce. And again, we're seeing a little bit of it today. We think there'll be a torrent of it. And that is what unites stablecoins and AI, because we think you're going to need blockchains and better blockchains, honestly. I mean, this was our thinking behind incubating Tempo, because you're going to need really high throughput blockchains for the agents.
And that's also really important. Stripe does have their own stablecoin. They're not using Ethereum. They're incubating a company called Tempo. And, if they see this entire industry growing, that should be very bullish for stablecoins, very bullish for Ethereum writ large, but also very bullish for the broader blockchain-based commerce / agentic commerce that would coincide with each other. Tesla has applied to conduct local FSD testing in the city of, I'm not going to know how to say that word, Jönköping, Sweden. Okay, FSD coming to Sweden. I had to have said that so wrong. How do you say Jönköping? Oh, I definitely said this wrong. Okay, I said Jönköping. This is how you say it.
Jönköping.
Oh, that's actually not too bad. I thought it was going to be like John Kopang or something. That's not too bad.
Jönköping.
That was actually pretty good. All right, there you go. Tassie coming to Sweden. Amazon's AGI lab leader is leaving. He was leading Amazon's development of the Nova Act AI browser agent. All right, so you got some exits from Amazon. That's not how it said, dude. That's what Gemini said. I am trusting the AI at this point. We are trusting the AI. Let's get an update here on the Netflix thing as well.
Yet, but it is likely to lead to superior offer, is what Warner Brothers board said late yesterday. That is the $31 a share, all cash offer for the entire company, and most importantly, the certainty that Paramount provided around that offer, saying that Larry Ellison and or others will provide more equity should that be needed towards close. If in fact the banks somehow were to say that Paramount was not in a solvent state, seems unlikely, but they wanted that assurance. They've carved out the performance of Warner Brothers cable networks in terms of contributing to any claim that Paramount might try to make about a material adverse change. So they have given Warner Brothers board certainty along with $31 and even a higher reverse break fee should the regulators say no to the deal, all of which puts this in Netflix camp. Now, to be clear, it hasn't been deemed superior yet, but my expectation is in the next day or so, it will be. And then the clock will begin for Netflix, as is its right, to have 4 days in which it can match the Paramount offer. Now, it doesn't have to match it dollar for dollar, and it wouldn't, remember, because its offer is a different one for the studio and streaming business, and then involves a spinoff of Warner Brothers cable networks. And of course, there has been a lot of debate about what those would be worth, given the significant debt load they have, given the multiple being applied. Our parent company, which is a compilation of cable networks, being quite low, that multiple. So Netflix got to decide. Now, based on conversations I've had, I'm not reading too much into Netflix's decision previously not to preempt by raising their offer so that they didn't have to give a waiver, or raising their offer after they were told this is likely to lead to superior offer from Paramount. They're making their decision. They're going to have their 4 days.
I think Netflix pulls out, dude. I think they are done with this debate. If they don't pull out, the stock's going down. If they do, it probably recovers. It's business as usual. Maybe the growth expectations will slow down, and Netflix can justify it. They can say, hey, instead of spending $90 billion that would have helped us grow, we got $3 billion for doing nothing, which is ultimately going to go back to you as shareholders. We can buy back our stock with that $3 billion. Netflix, they're 82 high of the day. And give us some time and trust us to figure out how we find the next Squid Games and Stranger Things. Let us double down on what we're doing. Advertising is still growing triple digits year over year. And, you know, this, I don't think the stock has to collapse from here. Maybe it doesn't get back to 140 anytime soon. But it doesn't seem like that story breaks that badly. Like they get $3 billion for free. It's not every day you just get $3 billion handed to you. So I don't know. I think it might be the right strategy. Stock right there of 5.39% on the day. Nobody wants Netflix's version of Batman. That's fair, but at the end of the day, if they can trust in their own creative content, maybe that changes the trajectory of the content they can put out. All right, folks, let's get a guest on the show. We do have Nvidia earnings today after the bell, and this person, I think, understands Nvidia better than most people on the entire planet, which is why it's super cool that we get to talk to him every week. Ladies and gentlemen, before Nvidia's earnings, Jose, what's up?
What's going on, man? Good morning. Good morning. How are you doing?
I'm good. Are you excited, dude? Are we feeling the excitement today?
I'm feeling very excited today. Extremely excited for earnings. Obviously, biggest position in my portfolio. But I mean, I probably sound like a broken record every time I come here during the earnings previews, but there's nothing that scared me for this upcoming earnings. It's just a lot of great news that we've gotten through the past few earnings from big tech, recent news as well. So I'm overall extremely bullish for the earnings that we're going to get. I think they're going to be on revenue, and I think they're going to be on guidance as well.
You know what you need, Jose? You have a good background. You have a great voice. You need some instant coffee, bro. Have you ever tried instant coffee in the morning? Have you ever? I feel like if you had some instant coffee, the analysis would just, get even better.
I'm not much of a coffee drinker, if I'm going to be honest. But maybe that's what I'm missing, That's the final piece.
Okay, before we get into Nvidia, I actually want to back up to yesterday's news, and then we'll talk about Nvidia. AMD, Meta, big deal, 6 gigawatts. Here's the question I want to hit you with, which is the hardest question, and I'll let you go from there. Why is AMD giving up now 20% of their company to OpenAI and Meta? Meta will have the rights to buy 160 million shares for $3 million. And at the time, if they buy it at what AMD tranches say it will be, which is 600, then Meta would have a $190 billion stake in the company. Now, maybe Meta pays around $100 billion of revenue to AMD in the meantime, but is that the right way for AMD and Lisa Su to be conducting these deals?
This is such a hard question, because obviously the bear case is why are you diluting your company, right? Or is this the only way you can kind of sell your GPUs? If this wasn't the case, would you not be selling these types of products? So it's like, how good is your product if you have to do this? Now, I think this is kind of like it's kind of like a Shark Tank deal style, where Lisa Su is coming. She's not the tank, the shark, right? Meta is the shark in this one. And Lisa Su is coming to these players and it's like, look, I am planning on building this type of AI infrastructure. I'm willing to give up equity. In return, you also help us. Because with this Meta deal, right, there's a few things that Meta does. First, they do buy the product, which is obviously bullish. But then they also help them with the design of future GPUs. And obviously with that, you can also help with the software optimization. So you're helping kind of the roadmap as well. So in theory, because of this deal and with Meta having an incentive to help them, it can help them make the MI500 a lot better. It can help them make the MI600 a lot better. So I think AMD does get that in return. The other thing is, I think it's a great publicity stunt. I mean, one thing that they mention is this is a GPU that is customized for Meta. So now I wonder, does this open the door for like maybe ByteDance, who's a huge buyer of AI infrastructure? If you can make a GPU, which still is very programmable, but make it in a way that it works a lot better on my workflows, which is very similar to Meta, who does a lot of a recommending system. Maybe I should start looking at AMD. Does this push other hyperscalers? Because one of the cool things about this is it is a custom GPU, right? Meta it's not just a plain MI450 vanilla. AMD did something pretty great with their design where they really make it more like a true Lego piece. And this is a true kind of way to see it. It's like, it's a GPU, MI450, you still get all the programmability that you get with a typical GPU, but we made it a little bit different just for your workload. So it's like,
is it an ASIC then at that point?
It's not necessarily, because you still have all that programmability that you can kind of run anything you could on the GPU. So it's like a mixture of both. Which could maybe be the moat that AMD might push in the future. This AI market is just growing so big that you don't need to just hit the core main market. And that's what we saw Nvidia do, right? Nvidia kind of hit that core market with all these GPUs that's great for all types of workloads. Now we see Nvidia actually doing something different, right? Nvidia is actually looking into ways to optimize different platforms. They have that deal with Grok, which I'm pretty sure we're going to get at CES, where they're focusing on like low latency stuff. We have a new CPX, which is a GPU that's meant for very large context. So we see now that the market is kind of spreading out into different workloads. And I wonder if this creates like a little bit of a moat for AMD, where you can kind of make a GPU very kind of, I guess on the top level, maybe ASIC-like, where it's going to be really good for your workloads, but still programmability. So, I mean, bearish case, back to the main question, bearish case, I definitely see it, but I see that in the business aspect, there's opportunity as well that comes with it.
Why do you think Lisa couldn't get them to buy without the 10%? Because obviously Nvidia is not giving up 10% of their company. Do you think if she didn't offer the 10%, Zucks would just go to Nvidia?
I don't know if they wouldn't. It probably would be a lot harder to sell. I mean, Nvidia does it a little bit different. They didn't do it with Meta, but they did it with OpenAI and Anthropic, where you kind of have that reinvestment in capital. With the great thing with Nvidia, right, you do get equity of the other company. Now it's a different way, but it's kind of like an incentive. Hey, we'll give you something in return. Right. Nvidia is doing it the smart way. I think it's Apple at the moment doesn't have, AMD at the moment doesn't have the type of cash that they don't have that balance sheet that Nvidia has. So they can't give up. They can't say, I'm going to give you $10 billion. The closest thing is I can give you maybe billions of dollars worth of shares, which in theory you can then sell off and even probably purchase even more GPUs in the future as well. I don't know if the deal would have gone through. I guess this is now the next question. So we already have an OpenAI deal. We have a Meta deal. If the third deal and fourth deal, we see similar things, it becomes crazy. Now you're giving 40% of the company. Luckily, right, there's only like 7 companies that really could make this type of deal. So you can't go to infinity with these type of deals, but that becomes the new question now. I think 2 is all right. Third time is like, now it's you can't do this. 30% is wild. So I think the next thing for AMD is to be able to get a big deal without doing this type of incentive.
To AMD's credit, Meta only gets the shares when the stock is at 600. So when, if shareholders complain about dilution, it's like, okay, but if you buy it at 200 and it goes to 600, you can't be that upset as a shareholder.
Yeah, exactly. And another thing that I was looking into, they had the conference call, and one thing that I was curious is on November they gave us a financial analyst day, and they mentioned in 3 to 5 years they were expecting over $20 of earnings per share. Now, my question is, with all this dilution, is that goal still intact? Because obviously you have now more shares. Do you still expect to hit those numbers? And luckily, an analyst did ask that question, and Lisa, so yep, we're still working on that goal of $20 earnings per share. So at the end of the day, $20 earnings per share, 34 PE ratio, which is not that expensive for the semiconductor tech market. You're still hitting a $600 price point in 3 to 5 years if those numbers stay intact. So dilution is happening, but as long as the bottom line is accredited, I think your investors shouldn't be too upset.
Right. Jose's YouTube right there in the chat, folks. You can make sure to subscribe to him. Again, he'll be live with me today at 3:30, Neil and Tanner, and he'll have plenty of Nvidia analysis after the earnings. So please make sure you subscribe to his channel. Nvidia, I think the biggest story of the day is, what does guidance look like? We've already got the CapEx numbers and it's pretty strong. What are you thinking Jensen needs to do on this call to get the street to recognize Nvidia shouldn't be stuck at 190?
Yeah, I mean, I think the first thing is the market just needs to wake up, because the multiple of 27 forward PE, I think, is where maybe we're closer to 28 now with a little bit of a bump today. But I think just a multiple expansion, this can easily go to like 32 forward PE, and that's over a $200 and $215 stock just on multiple expansion back to normal levels. But I think on guidance, market is expecting 71 billion. I truly believe that demand we're seeing, we just saw some great results from the Grace Blackwell 300, that it's 50 times better at inference than the H200 in forms of TCO there, and the tokenomics. So seeing things like that, and with the AI market evolving as quickly as we're seeing, I think we're actually going to get closer to 74 billion in guidance this quarter, which I think is insane, because 71 would put it at 62.5. So I'm expecting closer to like 66, 67% year-over-year growth on guidance. And the revenue expectations, we're expecting about 66 billion. I think we're going to get closer to 69. The main reason is AMD did share a little cool point during their earnings. When AMD reported earnings, they said that they were able to sell some chips to China, and that helped them beat revenue expectations. They also they mentioned that they were sending licenses to China as well. Nvidia, if AMD was able to sell $300 million in China chips to China, I'm expecting some millions, maybe a little bit over $1 billion of China revenue for the H20, and I would love to get some commentary on the H200 licenses. So that, just plus the overall demand that we're seeing, I think it's crazy. I mean, Nebia's reported amazing earnings. Right, they're sold out everywhere. They sold out Q3. They sold out Q4. They mentioned that customers are making longer contracts. Usually it was 12 months. Now it's longer than 12 months. The average price has increased. Iron also reported earnings. They mentioned that they haven't seen a difference in the tone of the AI market. Yesterday, Cypher reported earnings, and even though they're transitioning from Cypher mining to Cypher digital now, they also mentioned that with the contracts they have with AWS and FluidStack, I believe it's called, the Google proxy, they continue to see demand. And the third project that they're working on, they believe that because they have all the power on their table right now, this is the next deal they mentioned is going to be even more. It's going to be stronger than the recent one that they mentioned with AWS. So everybody has told us this market is bullish, and Nvidia has kind of stuck. I'm a little bit angry. It's up at 195 right now. I was hoping for it to be another still day until after earnings. But yeah, I'm very excited for earnings due to all the thoughts and discussions we had prior earnings as well.
Has it been a while since you've actually added to Nvidia?
At the 170s, I did I have a debit spreads that I bought. Right now, I'm no longer buying stocks. I'm just doing kind of like debit spreads on it, just to increase my exposure on it without having too much more equity. Actually cash on it, right? So increasing my exposure with less amount of money. So that's the only thing. But those are for like summer of this year. And I think it's like a 195, 205 spread. So I'm actually happy right now. And I bought them at like 170 something.
What do you think Jensen could say that would mess up the call? Like, what is that one thing where the market's like, yep, down 7%?
I think Nvidia made a lame mistake. It was good, but it's a double-edged sword of giving us that $500 billion revenue visibility. And when we actually went to CES, I asked Dion Harris why they gave us that number. And the main reason they gave us that number is they wanted to actually show the supply chain that we have massive orders. We have massive orders. It really wasn't meant for the investors, even though they did share it to the investors. What he meant, the actual goal was to show our supply chain. We have these massive orders. If we're telling you that we need this type of supply, you need to know that we have the orders in place. So it was to kind of create a form of confidence in the supply chain. But now investors, every single time we get a question, interview with them, it's like, has the $500 billion been updated? Has it been updated? Has it been updated? And I think if we start to get less updates from it, because it gave the goal that they needed, I think supply chain is happy. But now investors, every single earnings are going to ask, has that changed? And if we don't really hear too much bullish to take, because maybe they don't want to share anything, I think that's where maybe the stock could see some negative action on it. But regardless, I think that would be more just optics of the market, not necessarily the fundamentals of it.
Memory. So 2 questions here. A, do you still think memory is a little scary to touch because of this thesis around supply? B, do you think Nvidia is not going to have any supply chain issues because they've been able to secure memory, or could they end up saying we have some supply chain issues, which is a bullish thing because it's a supply issue, not a demand issue, but still could lead to delays of revenue?
So let me just go with the memory. I'm still scared of it, but the supply chain issue is not going to solve in 2026. It's not going to be solved in 2027 either. So this story could ride up. It could continue to ride up. It's just not one that I feel comfortable with my equity. But Micron and all these companies can continue to ride up. And if you own, best of luck to you. It's just such a scary thing that I don't know if you saw Arista Networks. If you guys did Arista Networks earnings, that company, the CEO is a lady, and she pretty much said that memory companies are pretty much effing them over. That's literally, if you look at their transcript, she's like, these deals on memories are insane. They're so much higher, and we just have to smile and say, yes, we accept, because that's how crazy the market is. The market is getting taken advantage by the memory space. I think the market is going to remember that in the future. Eventually it's going to shift, but at least for 2026, 2027, that's not going to be the case. Because even though these companies are seeing the demand, they're also scared. Micron is investing in fabs, but they're not investing as crazy as kind of like TSMC and all these other players, because they know it's probably better off for them to always be somewhat of constraint in this space, because then they have that pricing power. So their strength there. I just personally still wouldn't touch it. And I forget what was the other part. Nvidia supply chain. I think Nvidia has done well with the supply chain market. I think they're always going to be constrained there. And as an AI investor, that's what you want to. I think it helps the bullish run last longer. Because if there was no ceiling, everybody would be spending money like no tomorrow. They're already spending money like no tomorrow, but it's controlled, right? It's controlled. So now you can't have all the chips you want this year. So you're going to have pent up demand for next year, and then whatever you need, so that it keeps the cycle going a little bit longer. I think if there was infinite supply, this AI cycle would be a lot scarier. But this ceiling creates the opportunity for it to run longer, which I'm actually happy about.
To your point about memory, there was a article that came out this morning saying that I don't know if you saw this, but Samsung tried to negotiate with Apple around memory for the new iPhone. And originally they were going to come to the table and negotiate prices down from their 100% to 60% increase. They were going to increase it by at least something, but they wanted to go from 100 to 60. They came to the table with a 100% increase. And one of the semiconductor industry sources said Apple agreed to the 100% increase, it just goes to show how desperate everyone is to secure memory, even though Samsung was willing to do it a lot lower. And yeah, you're right. It feels like a company like Nvidia having the leverage that they have to be able to make sure their supply chain is intact is really important when it comes to investing in their future growth as well.
And
Okay, so
go ahead. Yeah.
Well, I was just gonna say, so so the capex story you think is fine. The memory supply chain stuff you think is fine. Do you think, I was reading about this yesterday, that Jensen needs to paint the picture? When you and I were at CES, one of the things he focused on a lot was robotics. Do you think he needs to paint the next S curve in this call to get us up to that 210 level you think it's possible for, so investors see beyond just Meta and Google buying chips?
I think right now it's crazy. I think we're still in the software agentic stage of AI. And that's still like super early. I mean, every other day we see Anthropic killing a different industry. I saw your post. It was hilarious how every day we're having Anthropic just destroy something. I think if they can just double down on that, right? It's in the software space. It's pretty cool, but you still have so many mistakes. If they can showcase, if they can tell us, look, the software market is this big of an opportunity and we're just hitting this little bit right now and it's growing at these levels, I think that could be a massive wave. The robotics, we're still in early innings, so we still obviously could get a lot more update on that. Right, we saw the partnership they have with Mercedes for L4. Maybe that might start in the fourth quarter of this year. So a little bit more competition in the autonomous robotics space for automotive industry, but I think just in software, you have a lot of opportunity. And then robotics, I feel like we'll get a lot more of that in CES. And that's the only thing I hate about this earnings is CES is happening. And are you going, by the way?
You mean GTC? Yeah.
GTC, yes. My apologies. You're going? All right, so I'll see you there. So I think
okay, so then if it's not a robotics argument, do you think he's going to lift up the software names today and like try to tell everybody to stop freaking out?
Yeah, I think so. I think he's going to be nice to the software companies. He has a lot of friends in the software space. He's going to say it's not destruction, it's additive to it. I mean, we even had, I forget if it was Cadence or Synopsys that reported earnings already. I think it was Cadence. They mentioned that for their software, they're seeing more people. They're adding so much more AI agents to it to help kind of the design of chips. And it's not like it's eating up the market. They're able to charge a little bit more with it. Customers are still pretty strong with it. So it's like, that was a prime example of AI not eating the market and is being used as a tool that they can charge a little bit more for. So I think there's a lot of software companies that can benefit from that. And like I was going to say, with GTC, unfortunately, I think we're going to have a preview of it and we're going to get a lot of cool stuff because we have the CPU that they're pushing into, the storage market that they're pushing into. They have the LPU, which was the system that they got with Grok. That's going to be a session during GTC. And there's so much more stuff that's going to be discussed that I think GTC is the pretty cool moment. And this is going to be just a trailer to it of like what's next for AI.
In general, you don't think that software is dead from AI. You think that maybe the growth rate slowed down, but it's definitely not like Salesforce going to zero.
No, I definitely don't. I do think though investors do need to see if there is a change in the gross margins, as you might have to spend a little bit more research and development on, or the cost of your software with. If you're adding AI, the tokens, who's adding the cost to it? Is it going to be added to you? Are you going to pass it down to the customer? All these new maybe cloud. The cost of cloud, the cost of APIs, the cost of the overall tokens. So you might have a software market where the margins might decrease a little bit. And it's important to understand that decrease maybe should shift a little bit the value of software stocks. Because I don't think if you're adding AI to your software company and you used to have like a 89, 90 gross margins, maybe you start to have a 80, 82% gross margins. It's not the worst thing, but now you can't price it as a 90 gross margin business. And I think that's what also the market is trying to do. What's the new cost of software? What is going to be the new gross margins based on everything that's being added onto this AI platform? Because we do need to add some cost to it. And I think the market, if they see a dip in gross margins, they believe that's the indication that it's going to go lower and lower, but I'm pretty sure it's going to flatline eventually. The moment is to price what that flatline is going to be.
All right, so final question for you. I'll ask you on the call as well. Again, 3:30 guys will be live, 3:30 Eastern. Jose, myself, and a bunch of other people. Pump or dump? What do you think?
Pump. I was on my live stream a few days ago, and I closed my eyes and I was looking at the numbers, and I think I saw $213.58. That was my non-analytic, just closing my eyes and saw what numbers showed up first. $213.58 by the end of the week. So I'm expecting a pump.
Yeah, I'm gonna do that as well. I'm closing my eyes. Let's see what comes. I'm seeing 211.74.
All right. Hey, there we go.
Dude, if I get that right, if you or me get one of those right, that's gonna be great.
That's the alpha that people are here for. It's when we close our eyes and see a stock price.
That's the alpha. That's why people watch. Yeah. All right, folks. Thank you, Jose, for being here. There's his YouTube right there in the chat. You can subscribe to him. Whatthechiphappened.com. That is his newsletter / community for semiconductor enthusiasts. You can check that out as well. I'm putting the link to that in the description in the chat as well. And it's instant coffee. Yes, I did see that as well. But he'll be live with me. I'm sure he'll be live later this week with me as well to recap the NVIDIA earnings. But again, if you want the instant coverage, please make sure to subscribe to that YouTube, and then his Twitter I'm putting here as well. You can follow him on X over there.
Yeah. Thank you so much. And yeah,
right, Jose.
I'm excited. I'm excited.
We appreciate it, man. I'll see you in a couple hours, and hopefully Jensen can deliver something.
Peace out.
All right. That is what we got, folks. I think we got to do the instant coffee every day at this point. I mean, we got a green day. We just happened to go blistering green the day we made instant coffee in front of everybody. I don't know. Given how suspicious you guys are, if I don't do it tomorrow morning and we go red, I think you guys are going to be upset. So we might have to do it now. S&P 690. Holding on. Nvidia just below 196. AppLovin's green. Netflix, great day. Iran, CoreWeave, Cadence, Palantir. Actually, Nvidia above 196. Palantir 128 to 135. Palantir moves a lot with Nvidia. I mean, if Nvidia can really make a move higher, maybe Palantir can get back into the 140s right here. And Hoodie, I mean, congrats if you didn't get super scared yesterday at 69. This one rebounding right here to 76. CoreWeave at 99. S&P at 690. We just need Nvidia to deliver. And if they do, hopefully we can get some more momentum. All right, that's it for me. I'll be back at 3:30. I'll be live with a bunch of people. By the way, the options today, Nvidia is actually not even the most traded stock in the options market. Tesla and Netflix are. And then you have Palantir at number 4. Then you have AMD at number 5. Circles up there. Micron, PayPal, Microsoft, Meta, HIMS, Hood, SoFi, BM&R, IBRX, Apple, Google, Amazon, CoreWeave, MicroStrategy. But top 5 are Tesla, Netflix, Nvidia, Palantir, AMD. And today after the bell, hopefully we get some decent results by Nvidia. All right. Word of the day. What do we got? Salubrious. Salubrious. I actually think I got this right. Let's see. Salubrious.
Salubrious.
There we go. It's a good sign for NVIDIA earnings. I got 2 words back to back correctly. Not bad. Health giving, promoting well-being physically or mentally. Taking a week off the screens can be surprisingly salubrious for decision making. I actually like this word. I feel like it's easy to say. I feel like I'll remember it. I never remember the word of the day. We've done like 300 of them, and I can't name you a previous word. This one I think I'll remember. Salubrious. Promoting well-being physically or mentally. Well, seeing some green on our portfolios would absolutely be salubrious. And maybe we're going to get that later today after the bell. It's the instant coffee, dude. The instant coffee is making me say these words right. That's what we got. What do we have on the poll? Let me just check that real quick, then we'll be done. Again, 3:30, we'll be live. Tanner, myself, Jose, and Neil, I believe. 51-49. Are we back? All right, so that's a tie. It's going to be up to Jensen later today. All right, that's it. Thank you, everybody. Lock in 3:30 p.m. Eastern. We'll be live. We'll be live till probably 6:30, so it'll be a good 3 hours. We'll listen to the call. We'll get some analysis before it, after it, and it's a big day. It is literally the end of I mean, we have earnings after this one, but this marks essentially the end to big tech earnings, and then we basically have a month off until we get back into it. So this will be a big one, and hopefully we're going to see some decent results from the largest company on the planet. All right. Thank you, everybody. I'll see you guys at 3:30, and we will keep going from there. Bye, everyone. Have a good one.